welcome to the 2023 Icea Retirement Benefits Umbrella Scheme AGM. My name is Paul Martin Sandade. I work with Icea in the pensions department. I'd like to welcome you once again. We're about to start. It's 9. For those of us who are still having breakfast outside, kindly come in. I'll request that we screen the agenda for our AGM. Okay, as we get the technology sorted, the first part of our agenda will have the opening prayer. I will then invite our chairperson, Madam Agnes Mayanja, to take us through the meeting. So, ladies and gentlemen, let us stand up for the opening prayer. Ourselves. Father Lord, we'd like to thank you for today. We thank you for the opportunity to have the members present with us to present to them the affairs of the meeting. We pray that this meeting is a success. We pray that the members are satisfied at the end of the meeting. And we pray for generally a good day and good weather. In Jesus' name we pray. Amen. Thank you. The agenda, please. Ladies and gentlemen, we will get on with our agenda. As we sort out the screen, I will invite our chairperson, Madam Agnes Mayanja, to open the meeting. Madam Agnes, you're welcome.
Thank you. Thank you very much, Paul. Good morning, everyone. I would like to welcome you to our 2023 Annual General Meeting for the Icea Retirement Benefits Umbrella Scheme. And I hereby call our meeting to order. I believe notice was given to you all. The meeting for today will be held in a hybrid format. We have our members, shareholders, some of whom are online. And we also have others, members, shareholders, service providers within the room. You are very welcome. We'll flash, Paul, are we able to flash the agenda?
Chair, they are still trying to sort out the screen.
Okay. So the agenda was shared, and when you see the agenda, we've already had the opening prayer that was led by Paul. Thank you very much. I would like us to confirm if the agenda can be adopted. I know many of you have got the agenda. Should we adopt the agenda as is so that we proceed, or there may be changes to this agenda? Yes, Paul.
Madam Chair, just a slight amendment. We would like to have the minutes reviewed and adopted at this meeting.
Okay, thank you. We'll amend the agenda to include a review of the minutes of the last AGM. Thank you very much. Moving on, may I please have 2 people, 1 person, moving a motion to adopt the agenda as amended, and a second one seconding the agenda. Then we can proceed. Okay, we have someone that has moved to adopt the agenda. Can we have the seconder, please? Members, by show of hands. Yes, thank you very much. Gentleman in pale blue, thank you. So we now, the agenda is now adopted. Members, I request that we do proceed with the meeting. So the meeting, the next item on the agenda will be the review of the minutes for the last AGM. Paul, is it you taking us through the minutes?
Yes, Chair.
Okay, let's proceed.
Could we kindly flash the minutes?
Okay, as the minutes come on for everyone to see, I once again welcome you to this 2023 annual general meeting for Icea Retirement Benefits Umbrella Scheme. My name is Agnes Namialo Mayanja. I will preside over the meeting today as chair. I am one of the corporate trustees for this scheme. Are we ready? We always, with the system. We'll probably get into some housekeeping. As I mentioned, we do have our members online. Members online, as we proceed, if you have any questions, please drop them in the chat. We have our experts here. They'll be able to respond. The members in the room, my request is to jot down your questions. We'll give you an opportunity to ask the questions and seek any clarity during the Q&A session. Okay, Paul, over to you.
Thank you, Madam Chair. So these are the minutes for the meeting that was held last year, that related to 2022. Held on the 22nd of June. Our first page is noting the trustees, our founder, noting the service providers, kindly scroll. We also have, on the first page, we have a note on the agenda. On the second page, the meeting was convened. That's the first minute. We confirmed the previous meeting minutes. We had the founder's opening remarks, a communication from our corporate trustee, represented by Mr. Muhindi. We had the presentations from the service providers, beginning with our auditor. We then went to a presentation from the administrator. That is on page 3. We had a presentation from our esteemed fund manager, and we also had a note from our guest speaker. So that's on page 3. We had also remarks from the UBRA representative, that was Mr. Cosmas Senyonga, and then we went into the question and answer session that is on the last page, the 4th page. So we had quite a number of questions from the members that were ably answered. Our corporate trustee closed off the meeting, had closing remarks, and the meeting was closed off at 12:55 p.m. Over to you, Chair.
Thank you very much, Paul. Members, just quickly, can we have 2 people confirming that those were the proceedings of the last AGM? Proposer, please, and seconder, by show of hands. Yes, thank you very much, and thank you. So we've adopted the minutes. We'll now proceed with our agenda. The next item on the agenda is the communication from our sponsor. Our sponsor for today morning is the CEO of the Icea Lion Life Assurance Company Uganda, and that is Mr. Emmanuel Mwaka. Good to have you with us today morning.
Good morning, ladies and gentlemen. So allow me operate protocol recognition. Our chairperson, Mrs. Agnes Mamiaro Mayanja, the ED for KCB Bank, and the members from KCB Bank. Our regulator, who should be here, is Daisy Navakoza, and or Davis Mbuga, our scheme custodian, represented by Patience Nonjera, our scheme fund manager, Icea Lion Asset Management, the admin, Icea Lion Life Company. I greet you all, and I welcome all the members of the scheme to this AGM this morning. Of course, given that we have a hybrid session, sometimes it's difficult to keep attention for everyone, both those that are fighting with folks and those that are looking at small pictures on the screen. But I hope that I'm audible enough. Mine is a very, very simple observation or simple statement. As the founder, Icea Lion Life Assurance Company, as you may already know, was founded was set up in Uganda sometime in 1999, and this year, 2024, is when we get to celebrate our jubilee, our silver jubilee. We are a one-stop financial services provider, offering life assurance, pension, and investments for both individuals and organizations. And our strong position in Uganda, from our financial statement perspective, has enabled us to empower our clients to better manage their finances. I'd love to recognize our regulators, starting with our principal regulator for the retirement benefit scheme, that's Uganda Retirement Benefits Regulatory Authority, for creating the conducive environment that we operate in, to ensure that the funds that we look after in trust for our members are funds that we hold and handle well. And I also want to thank and recognize the Insurance Regulatory Authority of Uganda, who also happen to be one of our clients under the umbrella scheme, and thank them also for the guidance and the help that they provide to us as we guarantee their minimum return for our members. The regulators, of course, are very important because they are the ones that set the pace for how the industry operates. And tongue in cheek, I would say sometimes it feels very easy going through the raft of changes that the regulators propose, but we believe all this is really for the good of the management of the scheme, for the benefit of the members of the scheme, and we appreciate and honor our regulators accordingly. Our company is built on the efforts to protect your wealth while helping you create more. And we generally ultimately aim to be the leading Pan-African provider of financial services, providing solutions for Africans by Africans. And as a company, specifically, we continue to lead in innovation and are still the only provider of what we call the annuity plan in Uganda. To my far left, there's a man in blue there, which you can see him. He has one question, what's your plan? I hope when you look at him, you don't seek to look like him at the time when you need to. We have the solution to make you smile better. I'm that gentleman on my left. We are also proudly the first licensed scheme, globally licensed scheme, qualifying under what we refer to as the qualifying recognized overseas pension schemes in Uganda. So we are recognized as well now by His Majesty the King and the British government. This then allows us to also finish the loop of the financial services that we provide to those that call Uganda home and those that would love to be looked after by their own. The Icea Retirement Benefit Scheme was designed to specifically offer retirement benefit solutions to employers who seek to improve the quality of compensation that they give to their employees, and also who seek to do this without necessarily increasing an administrative burden on the company. So this scheme was designed as a defined contribution provident fund scheme, which can allow many entities to join in, to join an already existing legal structure and enjoy the economies of scale and what comes with protecting contributions within a secure environment. As Icea Lion, we are proud to have the largest retirement benefit scheme in the market, and we know that we do this not specifically because of anything, but because of the service that we provide and the guarantee that we offer, but the promises that we make are promises that we will always seek to meet, and we will always walk the journey with our clients. As you'll get to hear later on, the performance for the scheme in 2023 was underpinned by the performance of a number of underlying investments, whose performance was largely dictated by the global economy and whatever else has been going on around the global economy. We are still reeling from the effects of COVID-19 pandemic, and more recently, the Russia invasion of Ukraine, or better known as that war that we do not think will affect us, but has affected us. And we've also seen that the actions of the Federal Reserve of America have ultimately ripple effects in the performance of the local currency in Uganda, as well as the various investments that we hold within the region as mandated or as allowed by the regulations from the Uganda Retirement Benefits Regulatory Authority. So despite the uncertainties during the year, the scheme was able to register continued stable and good performance while maintaining its core mandate of preservation of member contributions, ensuring that the principal sum that we receive, that the scheme receives, is kept intact, and at that time actually an amount is already set aside in form of the minimum guaranteed rate of return. This takes a lot of effort and is quite expensive, most especially when you think about it from the seemingly glossy investments that help people out where there is an impact or where there is a likely risk, even if it's minimal, on the overall safety of the funds that we receive as a fund manager. I would like to thank and recognize the contributions that are coming from the very good team effort that's played by all the service providers, of course starting by the scheme leadership, by the corporate trustee, so Trustee Bank, who is the overseer of the scheme, as well as the tactical decisions made by our fund manager, Icea Lion Asset Management, and the custodian providing a much needed safe custody for the assets of the scheme. I'd like to remind members that these funds accumulated during your employment should be preserved so that more is available when the real need arises, which is right after retirement. There is a concept which is referred to as replacement ratio, which must remain a mainstay in all discussions relating to retirement benefit schemes. At Icea Lion Life Insurance Company, we are proud to be the only company with the capacity to offer an new solution that then addresses the aspect of the replacement ratio. And we continue to have this product as an award-winning product that offers unique offerings that not only guarantee you, your member or your individual savings in retirement after you exit your current employer, creating a room for you to actually keep your money safe in anticipation of actual retirement, but also protecting the future again that you have worked hard for. And to further help members with the preservation of their benefits, we continue to run a personal retirement scheme that offers solutions to individuals whilst enjoying all the benefits of the umbrella fund, like guaranteed interest, the key to the benefits, and also to ensure our access to the self-service support. And we may be listening to a bit of this in the subsequent presentations. During the year, the Icea Retirement Benefits Umbrella Scheme under the guidance of the Uganda Retirement Benefits Regulatory Authority and the corporate trustee, amended its trustees and rules to allow for midterm access for mortgages and housing loans. We encourage members to explore the available options, maximize the use of their benefits, and specific details, of course, will be provided to those that qualify in due course. And in the event that you need any more additional information, represented here by a number of staff from Icea Lion, possibly, I know it's not in my mandate to ask them to stand up, but may I please ask the Icea Lion team online, the web, and the ones physically here to rise to your feet, so that the members in the room can see who you are. So this is part of the team that manages and looks after you. If you have a question, feel free to drop it to any of them. I'm sure they'll be able to attend to you. So I congratulate the trustee, the service providers, and the members on yet another year of good performance and stability of the scheme, and thank the participating employers for entrusting us with the management of the retirement benefits. At Icea Lion, we believe that all the promises that we make we must keep, and that's our play on call. And I want to also especially thank the organizing team that allowed me to make my first foray in Team 4 Points. And I'm sure I hope that there are a number of you who are here for the first time. And I want to wish you very good deliberations. Lastly, at Icea Lion, we believe that for every life-changing moment, we are always better together. We hope that you will trust us to actually make that moment, or those moments that are going to come, those milestones that are going to come in the future, moments of joy, moments of celebration together, and moments of growth for both of us. I wish you very good deliberations in this annual
Thank you, our gracious sponsor, represented by Mr. Emmanuel Waka. I'll invite our chairperson, Madam Agnes Mayaja, to give us a speech that relates to this occasion. Thank you.
Thank you very much, our MC for today. Thank you to our sponsor, Mr. Emmanuel Mwaka. I think it's not my first time to have breakfast in this area, but I know the breakfast is usually very delicious, and we thank you for that. Good morning, everyone. All protocols observed. This retirement benefits scheme annual general meeting for the year ended 31st December 2023. The AGM provides an opportunity on the scheme's performance. We will be hearing from a number of our service providers. We have heard from our sponsor. We will be hearing about the financial performance of the scheme. And I will want to encourage all of you to listen attentively and ask the necessary questions. The scheme was established in June 2014, and interestingly, this is 2024. So to the sponsor, we will be expecting a big party one of these days, and congratulations. 10 years is not a mean feat. A lot must have happened for us to get where we are. The scheme stands as one of the pioneering umbrella schemes in the country. It currently holds the distinction of being Uganda's largest umbrella scheme. It boasts assets exceeding 108 billion. Its enduring longevity serves as a testament to all its stability and capacity to fulfill its liabilities. In 2023, we did retain our service providers within the scheme, and I would like to call out some of our service providers. We have our fund manager, Housing Finance Bank Uganda. Housing Finance, yes, there you are. The fund administrator, that is Icea Lion Life Assurance Company Limited. Fund administrator, yeah, thank you. Administrator obviously in charge of whatever is going on. And our auditor, we retain the services of our auditor, that is MAM and Associate Certified Public Accountants. Yes, good to see you. So moving on to the economic highlights of financial year 2023. The inflation decreased sharply from about 10.2 the year 2022 to 2.6 as at December 2023, in line with the central bank's target. And the decline was attributed to the low prices for food and fuel. Additionally, we saw the local currency showing resilience during the year with less than 1% depreciation against the dollar during that year. Furthermore, we saw interest rates dipping in 2023 due to a decline in the issuance of government bonds. But of course, we've seen the scheme continuing to attract new participating employers. For the financial year 2023, we saw the fund grow by 27.84% compared to the previous year. So that was a humongous growth, as you will see in the coming presentations. Contributions also grew by 10% during the year. So we saw a remarkable 40 billion from an average of 26 billion in the prior years. The fund is growing, and that's what we want to see. Congratulations to all involved. Investment income increased as well by an unprecedented 4 billion. So we saw that move from about 11.9, from 7.8 in 2022 to 11.9. So that's a 4 billion increase in investment income. The scheme, you will also see, has been able to manage its cost prudently with a cost-income ratio of under 0.2%, and to be exact, 0.11%. Looking into the benefit scheme, the statements, the benefit statements. Statement with interest for the financial year 2023 were shared with all the members. That was in May 2024. The same is also available and you can get it from the administrator at your request. I would like to remind members, it is very important that the scheme has your personal detail. Please update your beneficiary forms. Use this opportunity, get in touch with the key stakeholders. We have the administrator here to update your beneficiary form. It helps the scheme identify the correct individuals to receive your accumulated benefits. In the unfortunate situation, in the event of anyone's passing. As I close, I cannot end my presentation or my speech without thanking our sponsor. That is Icea Life Assurance Company Limited, for the continued support, for entrusting KCB Bank as the corporate trustee with the authority to run the scheme. We don't take that for granted. I would also want to extend our appreciation to the service providers. You've done your work diligently. The participating employers, you've also remitted the contributions for the members. The regulator, that is the Uganda Retirement Benefits Authority, we thank you because you do create the market confidence that enables us to spur and grow the industry. As I conclude, I would like to reiterate that for 2024, we are cautiously optimistic. Even with geopolitical issues that still remain, the wars in Gaza, in the Ukraine, they remain, but we are optimistically cautious that we will be able to do well in 2024. We continue to focus on our commitment to maximize the returns for our members while creating value for all our stakeholders. With those concluding remarks, I would like to ask the KCB representatives, corporate trustee representatives within the room, please stand up and just so I have Sheila over there, one of the corporate trustees, and Patrick. But I know we also have many more online. So please wave to the participants, to our members, to our shareholders, anyone online from KCB. With those few remarks, I thank you all and wish all of you good deliberations for the day. Thank you.
A big thank you, Madam Chair. And through you, we'll go on with the agenda. We'll have a presentation from our fund manager just to take us through the technical numbers and that underlie the performance for the previous year, 2023. So Cindy will be online.
Good morning. Kindly confirm if you can hear me.
You are loud and clear.
Perfect. Okay. I would like to thank everyone for choosing Icea. We don't take it for granted. So my task here is to just take you through what we went through in 2023 in terms of each asset class. Just allow me to share my screen shortly. Yeah, I hope that's clear and you can all see that. I'll just need one person to confirm that my screen is up.
Yes, Cindy, we can see your screen.
Thank you so much. So starting off with the exchange rate and inflation analysis. in 2023, like the previous speaker mentioned, the shilling depreciated, but by 0.9%. That's a slight improvement from 1.6% depreciation that we saw in 2022. When you look at our neighbors, such as Kenya, they depreciated by 5.8%. If you all recall what went wrong there, they had so much political instability that impacted them, and they saw offshore investors exiting the market, especially in their equities. So compared to Kenya, we didn't do as badly as they did. So we only depreciated by 0.9%. One of the reasons for that was the World Bank freezing on the new project financing when we issued the Anti-Homosexuality Act. So this act had a huge impact on us because that amount that comes through from the World Bank that finances our budget is really notable, and that affected our debt affordability. So when that was affected, the rating companies came in and then they downgraded our rating because they saw that we were not going to be able to finance our debt sufficiently without that funding that played a key role in our budget. So going forward, we expect a shilling to trade range bound. That's within the range of 3,700, 3,850 in the medium term. So as an economy, one thing that really helps us is the fact that we don't have euro bonds. Euro bonds means investing, borrowing in a foreign currency, such as dollar, euros, any other major foreign currency. So that is something that has really helped us. If most of our debt is seated in UGX, then we'll be able to finance it. But imagine you have to pay back in dollars that you're not earning as an economy because we're net importers. So that's where Kenya went wrong. When it comes to inflation, like the previous speaker mentioned, it was really low throughout the year 2023. We closed at 2.6% in December 2023 versus 10.2% for December 2022. The main reason for this was there were lower prices for services, food, and fuel. And if we can now recall, really, the weather was so good in 2023, it was raining nearly almost every month. So that played a key role to increase the supply of crops and cash flows in our economy. That in turn led to lower food prices. So with that in mind, when inflation is low, Bank of Uganda to intervene to also boost economic growth by cutting CBR. So CBR was lowered from 10% to 9.5% throughout the year. And going forward, we project that inflation is likely to remain below that 5% medium-term target that BOU sent. And the major reason for this is we expect the supply of food to remain healthy. The weather conditions are likely to remain healthy. We're not seeing any signs of any drought or anything that might affect it. But we still have risk from our neighbors, Kenya, where most of our imports come through. If Kenya is not stable, that means the cost of importing fuel is likely to be impacted. And we all know how fuel affects the prices of everything. Even some people, when they die, it affects their business and save fuel, and that will lead to an increase in prices eventually. But for now, in the near term, we see inflation remaining just below the 5% target. When it came to the interest rate environment, it was a low interest rate environment in 2023. And this was mainly due to low appetite to borrow domestically from the Ministry of Finance. So in most of the primary auctions, they were rejecting the bids that came through, and the strategy there was to manage their interest costs. But this was not sustainable considering the fact that they now need to increase their other financing options now that the World Bank is out of the picture for now. So with that said, on May 17, 2024 this year, Moody's came in and downgraded the Uganda's issuer ratings from B2 to B3. And the main reason for this, like I mentioned earlier, it was decrease in debt affordability and also limited financing options. So when that happens, the parliament came in and approved a budget of 72 trillion for the fiscal year 2024-2025. So that in addition to our limited debt affordability and limited financing options, the budget has grown significantly by 14 trillion. That's from an initial proposal of 58 trillion. So all these are pointing to one direction. Interest rates are heading one direction, which is gradually upwards. So we expect the yield curve to adjust by about 30 to 50 basis points across the curve, and we're already starting to see this coming through in the financing, in the primary auctions that have happened already. So what's the other key to note? We had the auction calendar release, and they only have one issue, that's a 15-year, that will be a new issue coming in. And then something else that was key to note is, in the past, or as long as I can remember, or they would come into bond auctions for only 2 bonds. This time around, they'll be asking for people to bid for 3 bonds. So that's another sign of how desperate they are to cover the gap, the financing gap that they have for the fiscal budget. When it comes to the equity market, locally, nothing much changed for 2023. We only saw the local counter index fall by 1%, and this was due to a slight decline in appeal counters prices, and this has largely driven by lower market turnover. So the problem we face as a country is our stock exchange is just limited in terms of liquidity. Not so many people out there aggressive when it comes to trading. So we cannot blame it on the performance of the companies. It's mainly due to the culture that we have when it comes to trading stocks. It's still young, it's still learning, it's not aggressive. So that said, that's really what led to the slight decline of just 1%. While on the other hand, when you include the Nairobi stocks, the all-share index fell by 17%. So what does this tell you? A significant amount of the decline in the share index was from the equities coming in from Kenya. This was mainly due to reduced investor appetite. Foreign investors were net sellers for the greater part of 2023, for the reasons I mentioned earlier. So how these asset classes work, they're all interrelated. It starts off with the economy having a high credit risk. So when the economy has a high credit risk, investors shy away from the economy. They start to demand for higher interest rates to take on that risk to lending to such an economy. That's how interest rates go up. In addition to that, some are exiting. When they're exiting, they want to buy foreign exchange and sell your local currency. So that leads to your local currency depreciating. And in turn, eventually, you're going to see the equities also losing because investors are trying to exit. So what's key to note here is that there's a high correlation between the exchange rate performance and interest rates. That correlation is higher than what goes on in the equity market, because the equity market is mainly on the fundamentals of a particular company of trading. For example, how is MTN performing? That's really what drives the equity market. So it's key to understand how all these asset classes interact with each other, because that's what advised our investment decision for 2023 and enabled us to come out with a return that will be declared later. So having that in mind, what is our strategy for 2024? So definitely we'll be keen on getting in that new issue of the 15-year, and we'll be maximizing on the upcoming primary auctions in order to lock in the bonds at a high coupon earning and to maximize return for the fund. When it comes to the equity strategy, we are going to be continue looking for stocks that are trading at a good price and that are trading at a really reasonable price versus their valuation in order to take advantage of what's expected of the company. And we are very, very cautious with this because we do not want to add on a stock for the sake of adding it on. It has to make sense in terms of dividends and the long-term prospects. And also we have to keep in mind that our stock exchange has a low liquidity that affects our performance. So that said, we'll be mainly not so aggressive in adding on 2 more equities, but we'll also be looking for opportunities to sell where we are in the money. And when we get those dividends, we're likely going to divert them to other asset classes, such as foreign exchange and fixed income assets for now. So that was it for my presentation. I would like to thank everyone for listening, and I'm happy to take any questions in the chat. I'll respond to them as and when they come through. So thank you all for choosing Icea Lion Asset Management as your asset manager. Over to you, Chair.
Thank you. That was the report from our fund manager, Icea Asset Managers. We'll now move on to the next item on the agenda. Members, please take down your questions. We'll give you an opportunity in the Q&A session.
Mission is provide efficient, innovative, customer-centric financial services so as to maximize stakeholder value. And our values as a bank, we call it ERIC. E stands for excellence, R stands for respect, I for integrity, and C for customer centricity. The shareholding of the bank, NSSA holds 50% of the shares, and the government of Uganda holds 49.2%. National Housing holds 0.8%. And as a bank and as custodians, we are duly licensed. We have a license from Bank of Uganda under the FIA Act of 2004. We also licensed by, we have a license from UBRA for the custody of the business. We also have a custodian license from Capital Markets Authority under the CMA Act of 1996. And we are an authorized settlement agent under the Uganda Securities Exchange. Sorry. Some of the clients that we have as a bank, we have banking institutions, we have microfinance institutions, we have umbrella pension funds, we have research organizations, we have insurance companies, to mention but a few. And we have a pool of clients, and Icea is one of our clients. As you can see, those are some of the clients that we have. We have, this is how our pension structure looks like. We have trustees who oversee the scheme activities going on. We have custodians. We are the custodians for safekeeping of the assets. We have fund managers. These ones are basically for investments. And we have administrators for record keeping and releasing periodic reports. Our role, we have roles in this. So our role as a custodian, we receive contributions made to the schemes, and we also do safekeeping of the assets. That is by opening cash accounts for receiving contributions. We also open up an account with BOU for government securities. We collect investment income for the investments made for the scheme. We also report to trustees on a quarterly basis and to members on annual basis. And finally, we pay out benefits to exiting members. So moving on to fund movement, the contributions that were received as of 2023, that was about 40 billion, and there's a movement of 11.2 compared to the financial year of 2022, where it was 28.8 billion. The benefits paid, for the financial year of 2023, there's 26 billion, and there's a movement of 12.7 from 13.2 in 2022. The surplus after tax, it was 9.5 billion, and there was also a movement of 3.3 billion compared to the one of 2022, where it was at 6.1 billion. And then we have the scheme expenses. of 12.9 million, and there was actually a decline of 2 million compared to the one of 22 of 12.9 million. And finally, our promise to you as Housing Finance Bank, as a custodian, we do promise to keep your money safely at all times, and we shall also make sure we track the funds. We shall provide regular reports to keep you informed at all times about what is happening, and we shall do quick member payments. Thank you for listening. This is the end of the report.
Thank you, Housing Finance. Housing Finance are the custodians of the scheme. We'll now move on to the next presenter. That is the administrator. Let's hear from the administrator. Thank you.
Thank you, Chair. The administrator will be represented by our COO, Ms. Ann Jerry.
Good morning, members. I think I've been ably introduced by Paul. My name is Ann Jerry. I am going to present the administrator's report. So, as the administrators, we are central to what is happening today, and we manage the scheme on behalf of the trustees, and we manage the affairs, all the affairs of the fund. So I'll be taking us through what our role is as our administrators, and also what the scheme, the events of the scheme that happened in 2023. So if we can move back, Fiona. I think our sponsor today, Mr. Emmanuel, talked about who we are as a brand, as Icea, and I'll not overdwell that, but as Icea, Lion Life, who is the administrator of the Icea Umbrella Fund, we are a one-stop financial solutions provider, and we are very, very proud, as the CEO said, to have the strongest balance sheet in the region to make sure that we give you comfort, that we can manage the funds on your behalf and on behalf of the members that we are representing here today. We've been in Uganda for over 25 years, managing funds and growing wealth for our clients. So our brand promise is that through every life-changing moment, we are better together. So moving on to the next slide. Anyway, this in a snapshot is what we do as a company, offering a varied product range in the life business. We, at the foremost, insure your life, you at a personal level. So we have products that are speaking to you at a personal level that is usually coming through. Examples of this being the education plan and endowment plans that we are operating. So talk to us when you want to manage your finances, and we'll be talking a lot more around that. So that can answer that for you at an individual level. Then as an insurer, we also have protection for your businesses. So I can see many of us here today represented our clients in the general company. So we also insure your assets as an insurance group. So we'll offer insurance also for protection of the loans that you may take with a bank. And if you're a SACCO, we offer those arrangements and cover for the loans that you're giving to your members that are taking loans through the various SACCOs and also through the various banks. We also have what we call a group funeral cover at the event, you know, life has a start and also has an end. So we have arrangements for last expenses that we arrange for our clients. We also have what we call insurance for businesses. This is especially talking to sole proprietors and partnerships. So we have what we call keyman insurance. Usually as a life company, we recognize that some businesses depend on individuals to run, and in that event, we usually cover the main person or the key person for that business. So the bank will say, if you want to take a facility with a bank, and you're dependent on either a partner or one individual who is a sole proprietor, then we offer key money insurance for that person in the event anything happens to that person, to ensure there is business continuity for that organization. Additionally, we are also very big in offering corporate arrangements for life insurance for employees as a life company. We also have what we call group personal accident or workman compensation arrangements for employees. So we are one-stop solution for employee benefits, as you can see. And ultimately, our biggest portfolio is around planning for retirement. And we offer solutions, many solutions around retirement. And that's what the key one is the reason we are here today, offering umbrella retirement solution. This is a multi-employer cover to make sure that we are saving for our retirement. And finally, I think CEO again talked about annuity plans. We'll be talking about that later, and also the personal retirement plans. In the event you want to do additional voluntary contributions and have arrangements at a personal level, and tell your friends who don't have such arrangements that they can also buy a personal retirement plan with us. So moving on, the reason why we are here is because we've agreed as employers, because today we are represented here by mainly employers, and online we also have members. The reason and the purpose for this arrangement is for our long term, the long haul, and ultimately retirement. You know, most of the time what happens in the office is that people are exiting employers every day, and they come in a rush, like they want to access their funds immediately. But that's not the purpose of this fund. Why we established the fund is for the long haul. At the point when you're no longer able to work anymore, you've attained your retirement age, at that point is when we envisage you to access these funds. So even members who've taken their funds out of their employers, we are hoping that they're going on to invest in areas that then will help them ultimately at the point when they're no longer able to work. That is in old age, ill health, or to leave something for your beneficiary at the ultimate death. But all the same, we still use these funds for job transition in between jobs, where you can use the funds in the interim. So that's what we are calling there as job transition. So moving on to why we are here today, the Icea Umbrella Fund. As Icea Lion Life, I've stated, we are the administrators, and I'll show you the functions of each of the providers that we are presented today, so that you all have a concept on why we have so many providers and why the regulator has put in governance around the management of the retirement schemes. So this is the governance structure, and I think that our chair, the trustee, has alluded to it. The retirement benefit sector is highly regulated because you want to safeguard the funds of the members, and you don't want events of prior years or many years that happened where schemes fail. So to safeguard all our benefits, the regulator has put in governance structure to make sure that your funds are secure and being managed in a secure environment, and therefore that's why we have many providers in this whole arrangement, because you may be wondering why we are having KCB, why we have housing finance. So I'll explain that here. So our regulator is the Uganda Retirement Benefit Authority. who may be present here today or online, but they were invited into the meeting. They oversee the scheme compliance and risk management of the whole industry and make sure that we're also following all the compliance areas that we are required to as an administrator and all the service providers here present. Additionally, as a company, we are an insurance company, so we're also regulated by Insurance Regulatory Authority, and more so because we are offering you a guaranteed return. So we offer a guarantee in terms of the return, and we also offer to you a guaranteed in terms of your capital. Any monies that you put in the fund, then we guarantee that you'll not lose in value. So that's why we are still regulated by the IRA. So Icea Lion Life is the founder. We are the ones who came up with the concept of the umbrella, and therefore we started the scheme. Then the founder appointed KCB as required by the regulator. We have a trustee. So this scheme is established under a trust to make sure it's safeguarded. So it's a corporate body in itself, but under trusteeship law. So the trustee and the person, the legal owner of the fund is KCB Bank in this case, and that's why they are our chair today, and they are the ones who oversee all the service providers managing the fund. So to start from the left, we have the fund manager, who was represented by Icea Asset Management by Cindy. So the role of the fund manager is advisory. They don't touch your money at all. They give advice on where do we invest the funds. So on a daily basis, they work together with the custodian, who is a housing finance bank, and the custodian must tell the fund manager how much money have they collected from the various employers. Then they're able to place or make a decision what is the best tool to invest these funds. And so they give advisory to the scheme in terms of which is the best avenue to invest the money. So that's the role of the fund manager. The fund manager is regulated by UBRA again and the Capital Markets Authority. And they must make sure they are compliant in all aspects. Then we have the custodian, who is Housing Finance Bank, who have already given their report. The role of the custodian is to keep custody, to make sure that all our assets are secure. All the money that you pay as participating employers, you're paying to Housing Finance Bank. And they're the ones who will in turn place those funds in the various assets that the fund manager chooses. So if today they decide they're investing in a treasury bond, that is the housing finance that is going to look to place that bond into with the Bank of Uganda. So the custodian is regulated by UBRA, and they're also regulated by the Bank of Uganda because they are a bank. Then we have to the extreme right, that is the auditor, who is able to do on an annual basis, come and assess and express their opinion on the financial statements. But in the middle of all this is the administrator, who is the Icea Lion Life. We manage your day-to-day affairs of the funds. We also coordinate all the service providers. We are the secretary to the fund. We are also the fund accountants, and we maintain the books of accounts for the fund. We are in charge of compliance, so any regulatory returns required by UBRA are made on your behalf by the life company. So then ultimately, of course, the important people that we are managing all these funds for is the participating employers and the members. So those are also very key in this whole arrangement, and that is really generally the setup of our umbrella fund. So introducing the corporate trustee. So the corporate trustee is not just one person, and it's not only the bank. It's represented by senior teams in the organization, and they were introduced here. But this is the team that is filed with the regulator as the corporate trustee. I'll not read out the names, they are displayed there. So I said one of our critical roles as ICA is compliance. We have the retirement retirement authority regulations, and they are very varied regulations. And I think the last 3 years have been we've seen so many regulations released by UBRA. So we make sure that we are following each of those, and all those regulations are geared towards having a very strong scheme or strong governance around the schemes. So what we do then, the regulations are around the scheme trustees, the licenses, the service providers, and we also have what we call an investment policy statement. This statement is what governs how the schemes are going to be invested generally, and is prepared by an actuary. The actuary looks at the liabilities or the components of each of the members that is present in the scheme, and looks at what is the horizon, how long are they likely to stay in employment. Then we match that to the assets, and so they're able to tell the fund manager in a long term, within a period of 5 years, this is where you need to invest the funds. So that is a policy, again, we file with the regulator. So talking of compliance, there are things we track, and we need to report back to you today on what the status is. The first one is the scheme audit. So this, we are compliant, and the auditor will be giving us the report of the 2023 financials. We also must hold an annual general meeting for the members, and that's why we are present here today. This must be held annually. We also make quarterly returns on behalf of each of the participating employers, and these returns relate to contributions. So when any employer is not contributing on time, we report you to the regulator. But so far, you've been very good employers, so probably you can give a clap to each of you. Yeah, so we've not had a strain. We really had a strain around COVID years. For now, all our employers are participating and paying contribution on a timely basis. But in the event you feel there is going to be a delay, you need to talk to us so that we work together, but also work together with the regulator, because ultimately there may be penalties that are applied by the regulator if you don't pay on time. We also hold quarterly meetings with the custodian, with the trustee and all the service providers, just to give the trustee the happenings of the scheme on what we are doing on an everyday basis. So we have what we call report backs. But eventually, we also come to visit you once in a while to make sure we are reporting back on generally what is happening around your scheme and any concerns around the members. So the other thing we check is the vesting scale. So each of you as a participating employer have told us that each member what will be the entitlement of the member at the point when they leave the services of the employer. So usually we have to follow that as an administrator when you are paying your benefits. And all this is again through IT enabled. So we're able to follow that, and we pay correct benefits to the members. Any money that is not vested on the employer, then that is paid or set against future contributions for the employer. The other item that we track is the licensing for the service providers. The providers are, I can confirm that all providers are licensed by UBRA, and this is on an annual basis. We have to make sure that we give very rigorous testing requirements by UBRA to make sure that we are capable of managing your funds. The last item I talked to it on the investment policy statement, that is also again in line. It's prepared by an actuarial firm, and that is in place and filed with the regulator. So again today, our mandate is to report to you what is happening in terms of the retirement benefits sector, what has been the new sector updates. So currently what the regulator is looking at is what we call medical assignment of benefits for medical purposes. So this is new. Actually, I've not seen it anywhere else. So what the regulator is looking at and saying, you may not use your funds for anything else other than retirement or when you're exiting. but they're introducing a new element and saying if an employee is very unwell and probably exhausted their medical, or if you don't have medical and they're unwell, then they are going to allow a member to assign their benefits to the extent of 50% towards treatment. So it's not yet law, but these are the draft regulations, and we believe it's going to be passed into law very soon. We're expecting this to pass before close of the year, and we'll be getting back to you in the event it does. But we would encourage employers as a first point of defense, it should be your medical insurance. So please, okay, I'm not selling insurance, no, but the first point of defense should be having an insurance cover so that we don't exhaust these monies which were meant for retirement using medical. But in the unfortunate event you've exhausted that element, you'll reach out to us. Then we're able to get these monies paid directly to the medical facility on behalf of the unwell employee, and probably it will be more useful for them in that nature as opposed to when they are dilapidated by ailment. So that is the latest update. And moving on now again to the actual events of the scheme in terms of the scheme membership. We have grown over the period. So this was the membership, comparing it to 2022 and 2023, current membership, standing at 8,000 members. This is quite a big number, starting January with 8,129, and a new people joining our membership of 547. But we had quite a number of people exiting employment of the various represented employers, of about 600 members. So this was as a result, we track reasons why members are leaving. So mainly, most members left as a result of resignations, but the bulk of this was retrenchment. So we've seen quite a bit of downturns in terms of employers. So we've paid quite a number of members because of end of contracts, retrenchments, and also resignations due to green pastures. So similarly, the scheme has grown. We are tracking a 5-year period, as you can see, from 20 billion in 2019 to now at 108 billion. But I'll let the fund accountant take us through this in terms of the specific growth for 2023. But I wish to thank each and every employer represented here today for trusting us to manage your funds. And we believe we're going to still continue doing our best to make sure we are safeguarding your funds, that we are keeping proper records, and also that we grow your money in terms of the returns. So this slide talks to specifically how do you get your benefits out of the scheme as a member. This now talks to you as a member. So at the event a member is leaving the scheme, then we say you have to contact the small committee within the organization, that is a management committee that is managing the affairs of the Provident Fund. So you reach out to them. Mainly there will be a HR representative who is going to give you a form as a member. You fill out that form, and then that form is sent to us to process the benefit for the member based on the vesting scale of the fund. So usually we'll pay you appropriate benefit. If you vested, or meaning you can access the employer portion of the benefit, then we are able to pay that to you appropriately. And then this is managed very efficiently and through systems that we've put in place to make sure then that as soon as you sign your form and discharge, we're able to pay you in collaboration with the custodian. So the custodian, the benefit is approved by the trustee, and then the custodian is able to settle the benefit into your bank account. So additionally, what we encourage you is to make sure that in the event of anything may happen, that you fill out what we call nominated beneficiary form. And usually this is paid in the event of death. And we've actually paid quite a bit of death benefits in 2023. And we've struggled in some where members did not fill out nominated beneficiary forms. So I call upon each of the members to make sure that they fill out these forms so that we're able to settle in the event, or the management trustee or committee is able to know who do we pay in the event you're not here to represent yourself. Moving on, I think I talked already about the nomination of beneficiary forms. So in case you've not circulated 2024 nominated beneficiary form, please reach out to us. We will send you that form, which you can circulate to all your membership to make sure they fill out the nominated beneficiary, to nominate their beneficiaries, because you may have change in circumstances. You have new babies, you have a new husband, so we need to fill out that every year, all to update our circumstances. So we'll circulate that to you, but you may also reach out to us so that we're able to give you the updated form. So as Icea and as our sponsor said, we believe in innovation. And one of the things we like to reach out to our members is through online portal. So I hope we've reached out to each one of you and you're able to access the online self-service portal for members. On this portal, then you're able to follow through the growth of your fund on a monthly basis. So I know we've mapped it out for most of you, but in the event there's a member represented today that is not able to access the self-service portal, please reach out to us, then we'll be able to assist you into the logging in. But it's also a very simple process. You only require your name, your phone number, and your email address for you to be able to access this. But our team is on standby to help you in terms of accessing the self-service portal. You can either do through talking to us, or you can access this through our website on our website. I hope it's somewhere. Finally, I'm coming to the end of my presentation. The last item, which again Emmanuel referred to earlier on, is what we call an income replacement ratio. I said the purpose of this fund is not to be accessed after when you're changing employment. That's not why we created the fund. The purpose of this fund is for you to save for your retirement. But ultimately, we always see members accessing it. But we are hoping, like I said, I'm emphasizing this because we've seen it as a big problem. We've seen members accessing it, and we are hoping that they go and save the monies elsewhere, again waiting for retirement. I know there is NSSF, but NSSF may not be enough, and I'll explain why. So retirement is a time of transition, and I don't want to preempt Ronald. We have a guest speaker today who will talk to us more about financial planning and retirement life, but it ultimately comes. I know we are all very, very young. You've heard from Kenya, Gen Zs. You all look like Gen Zs, like the people who are on the streets in Nairobi. Yeah? But retirement still comes. Even those Gen Zs will ultimately, even people who are were they X? The previous generation was what? Now people like me, I don't know. Is it Z? I don't know. X. Yeah, so as you were I'm Generation X, I think. I didn't know I'll get old. And many of us, probably Agnes, you can tell us. Yeah, we didn't think we'll get old, but retirement surely comes. So the concept of income replacement means that every day you should be figuring, how do I make sure that the monies or the salary I'm earning today, I'm able to replace it at retirement? What does that mean? I have to put aside money today for tomorrow. And income replacement means if today I'm earning 1 million, I would expect, or the International Labour Organization requires that you replace your income at least up to 60%. So that means if I'm earning 1 million today, I would expect at the point when I get to 60 or 55, whichever is my retirement, then I should be able to earn 600,000 as my monthly income. So that is what we are calling replacement ratio. Yeah? So that means you need to do calculations today. And because we are annuity providers, I can give you a tip. If you want to earn an annuity is your salary at retirement. That's what it means. It's a pension at retirement. It's salary at retirement. It's income at retirement. So if you want to earn, you're earning today 1 million, but you want to earn 1 million after retirement. So you just do a calculation, and usually it's about, if you're using, again, you have accumulated, I have to use Uganda shillings. So if you've accumulated 100 million, it's 100 million out, yeah. If you've accumulated 100 million, the annuity we are going to pay you, as a rule of thumb, will be 1%. 1% of 100 million. Who knows the answer? 1% of 100 million? Huh? I can't tell you. 10 million? Yeah. So if you've saved 100 million and you want to buy an annuity, yes, you're right. We'll be paying you an annuity of 1 million, yes. So if you want to earn 1 million, then you need a kitty of 100 million. Okay, that's an approximate. I'm giving you a tip on how to calculate an annuity approximate. But of course, at the point when you retire, we have to check, are you a man, are you a male, or are you a female? Yeah. Men tends to live a shorter time than women, but they may change that, I don't know. But so before calculating any of that, but the rule of thumb for calculating annuity is 1% of your 1% over your accumulated sum. So that's how you calculate how much have I saved for retirement. If I want to be earning 1 million per month, then I must have saved 100 million. So far you check your kitty, how much have I saved so far? So that you start putting, okay, of course you have to calculate your age, right? I mean, how long you have to go to retirement and decide, is what I'm putting in NSSF, is what I'm putting in my provident fund enough to give me the lump sum that I desire? So I hope I've explained the replacement ratio, but generally is the salary we earn after retirement, and the ideal is to have 60 to 70%, because it's assumed it's lower. You don't have to earn $1 million if you've been earning $1 million, because we expect that you're no longer educating children, you're no longer having a young wife to buy or take around. Anyway, it's also assumed that you've built your house, so you will not be using your retirement benefits to build a house at that time. Then we also assume that there are no children you're taking care of unless you are very active and you marry a new wife. And by then, that's one of the reasons men live a shorter time. There's a gentleman here who is very shy. You are going to live long. Yeah, so you'll have less costs at retirement, and therefore, that's how you're expected to have a replacement ratio which is lower. But the truth or the actual reality is that most people have saved so much lower than what is expected they should be earning at retirement. So our replacement ratio generally in Africa, we are around 20%, in fact less than 20%, yeah? Meaning we are encouraging old age poverty, yeah? We're expecting that our kids are going to be supporting us. We're expecting that retirement won't come. We are praying that we won't live long. We're expecting that there'll be a miracle. Or we'll have planted trees and those trees will give us something, you know. But the truth is, we are not experts, and we've spent most of our lives being employed and not doing so many other things. So it's best when you choose an avenue that you mainly understand. And therefore, that's why we encourage you to save more in a pension fund. So if we can move on to the next slide. Here we talk about what are the alternatives to make us save a little bit more. If you don't feel like saving more in the pension scheme, then some of the options that we have is to put in additional voluntary contributions. So the employer has defined for you, say, 10% as what you're going to pay on your behalf. You've also been defined for yourself 5%, but most of our participating employers actually, the employees are not contributing anything. They're saying that's the employer's work. Eh? But we are encouraging you today, this morning, to make a step to have additional voluntary contributions. So your scheme allows you to tell your HR, I want this year, deduct me a further 2%, a further 2.5%, a further 5%, 10%. We don't, any amount that you wish to add as voluntary contribution into your scheme. That will help you get into your target replacement income by the time you're ready for retirement. The other one, which I talked about, is a personal retirement savings plan. So that is available. You can talk to us. It works the same way. We will earn the same return as this fund. So you can open your own personal retirement scheme. And in the event you're leaving your current employer, you can transfer your benefits to your personal retirement savings plan. So you just need to tell the HR, or you're filling out in your form, that you're transferring your benefits into a retirement plan, into your personal retirement plan. And that takes a very short time to open up. Lastly, if you're of retirement age, then you can buy an annuity. An annuity is income in retirement. So you'll take your lump sum, decide what percentage of that lump sum do I want to apportion for my monthly income. So that's what we call an annuity, and you can talk to any of us to explain more how an annuity works. Then in your working life, we also have what we call endowment policies. So you can buy a life policy. This is a life policy, which also offers you a life insurance in the event of death, but mainly it's to help you manage your funds within when you're working. Yeah? Your other percentage, assuming you're contributing 5% to the scheme, the other balance of monies, you can use part of it to buy an endowment policy. And I will really encourage each of you to have this, because it's critical for our life happenings, life events, whether it's education for our children, whether it's marriage, whether it's buying land, whether it's a deposit for a mortgage. You can use an endowment policy to save for any other life event. Then we have what we call an investor plus. It's also part of an endowment policy, and I've talked to why it's critical to have an endowment policy. So my parting shot is that the best way to predict the future is to create it. So please take action, but we'll hear more from Ronald, and he'll tell you how to later. Thank you very much.
Wow, thank you. Thank you very much, Anne Jerry, for the report, the insights into the scheme administration. Members, employers, it's always important to understand how the scheme is run, the governance framework, and whether we are compliant with the regulatory requirements. Thank you for that. So we'll move on to the next item on the agenda.
Thank you, Chair. We'll have a presentation on the audited accounts. That's done by ourselves. Mr. Philip Ahabe will be taking us through this.
Thank you. And thank you, Chairperson. So, I know Anne set the stage and discussed a bit about retirement, so I thought I have a few jokes about retirement, but none of them work. Some guys will get it tomorrow. So, yeah, anyway, I've heard a few things. I've heard the money is not better in retirement, but the hours are. Although Anne says she has a better plan for that. Anyway, to the serious stuff. My name is Philip Ahabwe. I have the opportunity to present to us the audited accounts. I work for Icea Life Assurance Company as the CFO there. So we are involved in the preparation of these accounts. And you must have received, I expect you have received a copy, or at least an abridged version of the same. So I'll just do a few highlights of the financials. A bit of those things have already been mentioned, at least as we've gone along with the meeting. I think I wanted to make it a bit different in terms of your takeaways from this session. What you need to know about the umbrella that you're part of, what you need to know about the performance of 2023, so like highlights. Some of us are bored by numbers. Shouts out to the people in HR. Some of us are bored by numbers. But I just wanted to make it very, very simple. So this slide is my most important slide in everything that I will say. Talking about four main items. The contributions, that is the money that you save, you put into the retirement scheme. The monies that are paid out to the people that are leaving, the different employers, the participating employers. The income, and that's why we are all in this. We're in for the money. And finally, the value of the fund. So we see there that we had contributions of 40 billion, as had been mentioned earlier, both by the chairperson from a perspective as a trustee, but also from the custodian's report and a little bit of the administrator's report. We had a 10% growth of contributions to 40 billion in 2023, coming from 36 billion. So the increase there was about 4 billion, and that is you saving both as new participating employers. Our overall participating employers came from 75 to 84 in 2023. So part of that growth came from new schemes that we onboarded, but also a little bit of that growth came from your own increased savings, either in addition of voluntary contributions or even increased salaries wherever you're working. So we had about 40 billion in contributions. We had even a much bigger growth, as had been mentioned earlier by the chairperson, an unprecedented growth in withdrawals or payouts of 96%. So we paid out 26 billion in withdrawals. So that is testament that the thing works. When the time comes for you to get the money, you actually get it. We will have protected it and grown it up to that point, and when the time is due, you get it in good time. And thanks to the custodian and everyone else in that process to make sure that happens. So we paid out significant. So you can follow the bars on the other side. The 26 billion is in red. But also, we saw a growth in our interest income of 54%. It's much bigger than the growth in the contributions. And as had been presented earlier by the fund manager, this is a result of all the actions that the fund manager takes and everyone else putting their hands together into even what will be the declared interest rate at later on in this meeting. Just under 10 billion in interest income. That is distributed to all of us, and as the chairperson mentioned earlier, you should have received your statement that shows the distribution. So the quantum of all of that was distributed to all of us, I'm saying all of us because I'm a part of the umbrella myself as well, is 10 billion. Oh, just a little bit before that. Again, I said this is the main slide for me. So that meant that our scheme moved from 84 billion or about 85 billion in 2022 to 108 billion in 2023. So you should be proud as a member that you're part of a scheme that is over the 100 billion mark in this economy. Now, there are statistics that get released from time to time, especially around GDP. And I think I saw one recently where they sort of get the GDP per capita and say, you know, if Uganda's economy is worth so much, and there are, I think as of yesterday, they said we're about 45.9 million people, right? So then there's a certain amount per head, and you're thinking, but I don't think I have that amount in my wallet. But anyway, if I try to do a similar statistic of the 84 billion that we had in 2022, divided by the number of people, that members that we had in the umbrella, who were just under 8,000 members then, and then I do the same calculation for the 108 billion to the number of members we had at the end of 2023, it would have moved from 10 million per head to 13 million per head. Of course, it didn't work like that, yeah? Your amounts are different for each one of you. But I think it's a show of confidence in all of us that are involved in this umbrella. Those of us that are participating, sending our contributions, the service providers, the trustees, everyone involved, that we are growing together and deriving the benefit that we are looking for from this scheme. The next, please. The next just talks about an experience over 5 years. I won't speak to each one of them, but you can then see the trajectory of the scheme that you're part of visually, and see, you know, from contributions in the bottom, I think it would be left corner for you, and then the scheme value. It's amazing. 5 years ago, this scheme was just only 20 billion. 5 years ago. It's interesting, isn't it? In there, we have 2 or 3 years of COVID, yeah, which you would expect have destabilized us. But I think from my perspective, it's just appreciation to all of us for showing trust in what our value proposition is, and also playing your part to make sure that we all don't fear retirement. And what I began with as a joke, that the money is not better in retirement, and although the hours are, it's actually reversed, that both the money and the hours are better. I'd like to stop here, Chairperson, with your permission, and I suppose the auditor would come after me. Thank you very much.
Thank you very much for the report. Again, members, it's always good to see, you know, get insights into the financial statements. We've seen the growth of the scheme, something that we all want to be associated with. Thank you very much. So we'll move on to the next item.
Thank you, Chair. Before I invite Alfred, I would like to recognize the presence of the Uber representatives. Anne and Geraldine, you're welcome to our AGM. Alfred, you're also most welcome to confirm the numbers.
Thank you, MC. Thank you, Madam Chair. And thank you, Philip. The UBRA representatives here present, the sponsor, the corporate trustee, the fund manager, the scheme administrator, the custodian, members, ladies and gentlemen, all protocols observed. I greet you all in your respective capacities. I am Alfred Anwankani. I'm the managing partner for MAM and Associates, certified public accountants of Uganda. And we are, as a firm, we are regulated, licensed by the Institute of Certified Public Accountants. And for this particular audit of the umbrella scheme, the engagement partner was Mr. Moses Kamuhanjire, and he sent his apologies. Now, I can confirm that we audited the financial statements that were presented before you, the extracts, and I believe that the full set of accounts were shared with you. I don't know if someone is projecting, Philip. If not, then I'll just refer you to that report. The report is on pages 10 to 13, and I'll not read it word for word, but the report is a clean audit report. And also, just for your information, we've been with the Icea umbrella from 2019, and we've witnessed the growth in the total assets and the net assets, as you've seen, and would like to congratulate the scheme upon this great achievement. Thank you. So I can confirm that we audited the accompanying financial statements of Icea Retirement Benefits Umbrella Scheme, and were set out on pages 14 to 31 of the report that was shared with you, or that will be shared. Now, these financial statements comprise the statement of net assets available for benefits as at 31 December 2023, the statement of changes in net assets available for benefits, which is also the income statement in the different accounting languages, and then the statement of changes in member funds, which is equivalent to your statement of changes in equity for a normal trading company, and then the statement of cash flows and a summary of significant accounts and explanatory notes. And the opinion that we have is a clean opinion, and for the benefit of doubt and for the members, I would like to read it. In our opinion, the financial statements give a true and fair view of the net assets available for benefits of Icea Retirement Benefits Umbrella Scheme as at 31 December 2023, and of its changes in net assets available for benefits and cash flows for the year then ended in accordance with international financial reporting standards, the Ugandan Companies Act, and the Uganda Retirement Benefits Regulatory Authority, that's the UBRA Act and regulations. And that's the end of the opinion. So if there's a take-home, this is the only relevant paragraph you take. And in our report as well, we indicate the basis of the opinion, and key to that, we are required to confirm our independence, and would like to say that we are independent of the scheme in accordance with the IESBA code, that's the code for accountants internationally, and also the local code, that's the ICPAU. Yeah, and we believe that the audit evidence we obtained is sufficient and appropriate to provide a basis for our opinion. Now, Madam Chair, in our report as well, there are key audit matters that we came across, and we are happy to note, in terms of recognition and measurement of investments, we performed our procedures, because we are saying this is an area that is full of judgment in terms of the valuation of the investments as well. So we noted no exceptions. And in terms of the withdrawals that were being paid out, of course, this is susceptible to a risk of fraud, and we performed our procedures and also noted no exceptions in this area. And we looked at the taxation as well, and the majority of your investments are in the fixed income assets, and we're happy with the tax. And Chair, going through the report again, there are other information, a number of which are in the corporate trustees report, which were presented by the administrator as well in terms of membership, the 5-year financial performance, and many other things in terms of the meetings of the trustees. So we are happy that this is consistent with our understanding during the audit. The report also talk about the trustees' responsibility for the financial statements, and this responsibility has been delegated to the scheme administrator, and they have diligently done their duty. And also the auditor's responsibilities are clearly spelled out, so you can take time and go through this. And most importantly, we are also required to report on other legal and regulatory requirements. And as required by the Ugandan Companies Act and the UBRA Act and regulations, we confirm to you that based on our audit, we've obtained all information and explanations which to the best of our knowledge and belief were necessary for the purpose of our audit. And in our opinion, proper books of accounts have been kept by the scheme. And the statements of net assets available for benefits are in agreement with the books of accounts. And the engagement partner on the audit resulting in this independent auditor's report is CPA Moses Kamhanjire. His practice number is P0293, and the report was signed, sealed, and dated 26th April 2023 in compliance with the regulations. So also, as part of our audit, ordinarily we are required to come up with a management letter highlighting key findings in terms of governance, internal controls. So we're happy to note that for this particular year, I don't know whether it's because it was our last year of audit, but we noted no reportable matters. It was a clean report, there was nothing in it, but we had to write something for the UBRA, just to give them comfort that we looked at it. Thank you. So we congratulate all the service providers for this particular scheme. And thank you. Have a good day. Thank you.
Thank you. Thank you very much. That was MAM and Associates, Certified Public Accountants. We note the opinion of the financial statements. You emphasize the clean opinion. Yes, whatever you important.
Thank you. Thank you, Alfred, for the clean opinion that you've given us. It really gives the members the comfort that someone external from Icea looked at your books of accounts. We'd also like to confirm to the members that we shared a booklet that includes the speech from the sponsor, as well as that for the chairperson, and the detail that Alfred was alluding to here, so you can have a viewership of that. As we prepare to have our UBRA representative, Madam Chair, I'd request that we make a small alteration to your agenda and maybe get into the Q&A session.
Before the UBRA representative?
Yes.
Okay, great. Okay, that's accepted. We will now move on to the Q&A session. I expect that we did have a number of queries online, and maybe those queries have been responded to. If there is some unresponded to queries, Paul, please check out what's happening online.
Yes.
Q&A members, any questions? We have all our experts here. This is our scheme. If in case there are any questions, you are welcome by show of hands. Any areas where you might want clarity?
Okay, so we'll request for a second microphone so that...
Paul, I'll ask you to move around with the microphone. So
Okay.
you manage the Q&A.
Thank you. Dear members, would request a simple introduction of who you are and then your question.
Thank you very much. My name is William Dennis Omara. I am the Finance and Administration Manager of SafeSource Africa. My question is in relation to something that has stayed with me for some time. I know that, okay, my question is in relation to funds administration and management. My impression is that these two functions that are so critical are being housed in the same, within the same umbrella, same family. It would be helpful to appreciate further mechanisms we put in place to ensure that even when these two functions are resident in the same family, that proper checks and balances are in place to the extent that returns that are given to clients are not compromised. Of course, I'm cognizant of the fact that we have OBRA, we have the auditors in place. There are already mechanisms, but just to get that extra assurance that even the two entities are housed in the same family, that, you know, solid and watertight mechanisms are in place to avoid compromising on what percentage we get at the end of the year. I hope that makes sense, and I'm happy to clarify again if the question is not clear.
Thank you. Chair, should we take more questions?
Okay, thank you, Chair. My name is Moses Simbwa. I'm a member of the Management Committee for the ERA Provident Fund, which is a participating employer for this umbrella. I have, one is an observation. I realize the corporate trustees report has been presented by the administrator. That is if I got it right. Because, you know, we rarely interact with the corporate trustee, and the corporate trustee is the legal owner of this scheme. I expected that would have a report presented by the corporate trustee to show us, to demonstrate that in 2023 they were in charge, and probably highlighting some of the key decisions they took throughout the year. And to show that actually they were managing the different players or the different service providers. I've not seen that beyond. I expected the corporate trustee to go beyond just chairing the AGM. Secondly, I also note the AGM. I know it may not be in contradiction of any legal provision, but I find holding an AGM almost at the end of the first half of the financial year quite not the best. I imagine if things were not probably going right, holding an AGM after 6 months is quite, if it could be held in April, I think, like it's done for banks or other financial institutions, we could go by best practice if there is laxity in the law. My last comment is, I think it would be prudent, maybe I could have missed, but I were not served with a copy of the accounts before it came. And that's why I probably have this question, because I saw the interest, which the income which was made was 9.5, and the dividends which were distributed to the participating employers were 10 billion. So I didn't know where the other 500 million came from, but probably I could have answered myself if I had the accounts. Thank you.
Thank you, Moses. Some more questions, Madam Chair?
Thank you very much. My name is Joseph Chibuka, representing ABI Finance as a contributing member. I just have one question, that is clarity on the rate of return, basically what the fund yield is. What was it for 2023? If we could get a painting of what it was before expenses and what it looks like after expenses versus the cost to income ratio that the chair mentioned of less than 1%. Was it less than 1%? Which then creates a scale of if the people in this, of the employees are actually paid. Cost to income ratio of less than 1% versus return on investment looks really so efficient. Maybe can someone maybe explain to us what that means? Thank you.
Okay, maybe we can start with those. Paul?
Thank you, Chair. I request that you guide us on who will answer the questions as well.
Okay. I think the first one was around the management of the fund. There was concern around the fact that everything seems to be seated in one house. We'll have the sponsor supporting on that. And maybe before Emmanuel Mwaka comes in, I just want to point out that the presentation of the fund manager's report was actually by Icea asset managers. Then the presentation of the administrator's report was by Icea Lion Life Assurance Company. Yes, it's all Icea, but different entities. So over to you, Emmanuel. Thank you.
All right. Thank you very much, William, for the question, and thank you, Chairperson, for the guidance. So there are a lot of aspects that relate to segregation of duties. The segregation of duties that is in place, the segregation of duties, and I'm going to explain how duties are segregated with respect to the management of this scheme. As the sponsor set up the scheme and appointed a corporate trustee, that is KCB. So KCB actually takes charge, and as you hear from the responses to the question from Moses, you will see exactly what KCB does on a day-to-day basis with regards to the scheme. The second critical aspect of this is that we, as service providers, every service provider actually has a contractual document that guides and that provides the ambits within which they operate. Now, each service provider then is assessed on the basis of the contract that is provided for them. The administrator has a contract that they abide by, and the fund manager also has a separate contract in which, through which they abide by. As I think was presented in one of the presentations, the fund manager does not hold the funds at all. The funds that employees or participating employers submit, the funds go to the custodian account, and the custodian is Housing Finance Bank. What the fund manager then does is the fund manager receives, as part of the appointing documents, they receive what you call an investment policy statement that gives them sort of terms and conditions through which they must apply for the investment of funds under this specific scheme. Once that is then provided, now the fund manager uses that as their guiding document, and to which then they are bound to ensure that they comply. And the assessments for compliance with regards to that is now handled by the corporate trustee, because the corporate trustee then is in charge of making sure that investments are done in the right way as envisaged or as guided from the setup documents for the scheme. Remember, this scheme is set up as an irrevocable trust. Now, the other aspect of this as well is that from the regulatory perspective as well, each of the service providers is separately licensed by the regulators. So each of the service providers has a separate unique license issued by the Uganda Retirement Benefits Regulatory Authority, be they trustee, be they fund manager, be they administrator. Now, there's a whole host of details that are required before you are then licensed by the regulator. Now, that in the review of all those documentation, in the review of all that, then you find that you can never have, in this instance, for example, you can never have one company that then carries both roles of an administrator and a fund manager. One of the requirements for you to be a licensed fund manager from the regulator, Uganda Retirement Regulatory Benefits Authority, is that you must actually be a licensed fund manager from the Capital Markets Authority. Now, that's a completely different regiment altogether that has to be followed. So, for your comfort, William, there are very, very, very clear defined roles that are played by the different service providers, and these are guided by the setup documentation and by the trust deed that explicitly states who does what. Under no circumstance, then, will you find, for example, that the administrator is playing the role of the trustee. If you noticed in the presentation from the administrator clearly stated that the role for compliance is actually a role that is played by the administrator to monitor and ensure that the scheme complies. And this role is provided for under the Uganda Retirement Benefits Regulatory Authority Regulations and Act. Now, that means that the administrator then interacts with both the fund manager and the corporate trustee to make sure that all items that are required for compliance are then met. If that is reported by the administrator, it does not necessarily mean that the corporate trustee has ceded their responsibility to the administrator. No, it's the responsibility of the administrator to report to the AGM the compliance status of the scheme. I submit.
Thank you very much. That was a sponsor. And maybe moving on quickly, there was a concern around, I think it was more of an observation about the corporate trustee and the report presented. Why don't we have a report from the corporate trustee? Probably that's what it was. Just quickly to explain, there is a report from the corporate trustee. If you look at your AGM pack, you will find a report from the corporate trustee. But also, it should be noted that the corporate trustee, can also delegate some of these activities to the different service providers as defined. The different service providers have clear roles that they play. I will refer the gentleman that made that observation to the pack, the AGM pack, page 5, and probably the subsequent 2 pages on that. Then there was a concern around holding of the AGM. I think the intimation was the AGM is being held quite late. I believe the AGM is being held within the appropriate time. As per the regulations, it should be held a couple of months, I think, after approval of our financials. The deadline should be 30th June, 6 months after the end of the year. I believe we are well within that period. Then there was a question from Joseph Chibuka about the rate of, I think Joseph was seeking clarity on the yield versus cost to income ratio. We will have Philip responding to that. Philip? Thank you.
Thank you, Chairperson. And thanks for that question. So I suppose at a later point in this meeting, maybe after this, there's a substantive agenda of the declaration of interest. So I had excluded that item from my discussion for that particular agenda. But for clarity, we are required by law to declare a rate net of all expenses and taxes. So the rate that you saw in your booklet is net of all expenses and taxes. However, when you look at the detail of the financial statements, you will see the gross return, you will see the expenses that are involved, including the taxes that this umbrella is subjected to. I think, yes, that's projected. So I think for the gentleman who was asking about the 9.5 and how we come from the 11 billion, it's clear how that flows. The 9.5 represents the rate that shall be declared later, but which is 11%. So that is net of all taxes. But if you read the financials, the effective tax rate of the scheme for 2023 was 18%. 18% how? Because the fund is invested primarily, I think, primarily in government securities which suffer a final tax, sometimes 20%, sometimes 10%, based on the tenure of the bond that you're holding. Because of the mix of the assets that this scheme has, in some instances, the withholding tax, which is a final tax, was 10%, and in some instances, it was 20%, as well as the effective rate coming from the other holding of the assets, which gave us a landing of 18%. If you gross that 18% up on the 11% that you've seen on your statement, you get to 12.98%, which is the gross return of the scheme. I don't know if that makes it clear. So what you see on your statement is 11%. I'm sorry, Chair, I preempted the agenda, but the question begged that I had to, yeah. But the working backwards is the 12.98% that the scheme has earned. Take off expenses, take off taxes, because taxes are a must. We are taxpayers. And in some instances, actually in most of these instances, the tax is deducted at source. When the coupon is being credited to the custody account, the withholding tax is deducted at source. So what you then see as the credit to your statement has no other charge whatsoever. And I think that makes the 11% even more juicy, in my view. Now there I'm speaking as a member. Thank you very much, Chair.
Thank you. Thank you, Philip. He has also tackled a question that was available online. Where does most of our income come from? Clearly, most of our income is coming from the government bonds. So I hope the member is satisfied. Chair, we still have some hands at the back here.
Yes, we can take on some more questions, but I also want to remind you that we've now exceeded our time. We had allocated 2 hours, and we still have 2 items on the agenda.
Thank you very much. My name is Eva Nantongo. I represent Mildmay, Uganda. I am seeking clarity on the matter of the 50% down payment in the event of critical illness of a member. Did the presenter say that this money would be deposited to the health facility? I thought I heard that. But also, because I wonder, but also my other issue is, if it is 50%, would the law allow up to 50%? In the event that one doesn't want to take 50%, can one take a 10 or 20? Thank you very much.
Thank you. Do we have any other questions? Madam Chair, just one.
Thank you so much. I'm Judith Achek, representing Life Water International. I'm just throwing a question to the custodian. Yeah, I think that's Housing Finance Bank. So when you shared the report, we saw the surplus, and what came on my mind, I was just wondering if this kind of surpluses goes to the members or it's maintained for the operations. I just need some clarity regarding that. Thank you.
Thank you. Madam Chair, just one more hand.
Good morning. Joseph Duke is my name. I just want to thank Icea for this event. It's quite informative. Mine is on the user perspective. I want to see, I've seen that there's a lot of innovation. I want to just ask in terms of promoting transparency of this scheme, is there a plan to move this to an app so that we stop being asked the questions. When is my statement coming? How much is it? Have they allotted interest to my savings? Yeah, so that this makes it easy and the transparency is enhanced to the user. I'm speaking on behalf of the ones who are saving. Thank you.
Thank you, Chair. We do not have any more questions.
Okay, thank you very much. We'll, I think the first question was from Eva on the 50% down payment relating to the proposed regulation. That will be responded to by the UBRA representative. They are yet to speak to the members and employers. The second one was around a comment on the surplus shared in the custodian's presentation. So we will have the custodian, Housing Finance, respond to that. We still have
Chair, the custodian expressed their apologies. They would like to, they left, they are online.
okay, but we can still, if they're online, we can get a response from them. But we do know the person that has asked the question. That's Judith. We can also reach out to Judith and respond. I think the last one was from Joseph. One, thanking Icea for the event. I've also enjoyed the event. Thank you for that. And Joseph is wondering if there is a plan to further digitize this whole process, you know, apps, etc. And we'll have a response on that from Anjeri.
So thank you for that question in terms of innovation for the members. So I also want to clarify that for each member, we send to you a statement on your email of your provident fund every month. So I hope all members are enabled, especially from your organization, to receive their monthly statement. The other thing we do is that we send text messages when your contributions are updated. As long as you're paying before the 15th, when it's required by UBRA, then you're able to receive a text message to say that we've received your contributions. Then ultimately, when we issue the final statement, we send that again to you on your email address. And further to that, yes, we talked about the self-service portal. So the specific question is whether we are going to apply that to change the portal into an app. Yes, that is a long-term view. So we hopefully by end of year, early next year, we should transition to an app as another alternative for all the members. Thank you.
Okay, thank you all. Thanks for those questions. It's always good to seek clarity once we are in this AGM. We don't want anyone to go away still asking questions. But if we have that sort of case, you can still write to, inbox. The administrator will be able to respond to your questions. So moving on to the next item on the agenda, we will now allow for the remarks from the UBRA representative. Thank you.
Thank you, Chair. The UBRA representative will be speaking to us. Ms. Anne Jagenda, you're welcome.
Good morning, ladies and gentlemen. My name is Anne Jagenda, as introduced. I work with UBRA in the Department of Supervision and Market Conduct. I'm glad to be here. To the trustees, thank you for organizing the AGM, and AGM is a requirement under the regulation, so thank you for complying. To the service providers, thank you for your work, and thank you for, it's evident with the numbers that you've shown. We've seen the growth of 28%, that is recommendable. Thank you so much. And to the members who are the key stakeholders, thank you for being here. Thank you for creating time to come and listen to the fund and how it's performing, because this is your money. And it's interesting to know that you're also interested. Thank you for being here. Briefly, about UBRA. UBRA was established under the Uganda Retirement Benefits Regulatory Authority Act 2011. It's a long word, so, but I have to say it so that we are all on the same page. One, we are established to regulate the establishment, management, and operations of the schemes, and Icea being one of the schemes that was established, managed, and we supervise the operations. We protect the members' interests. That's why we're here, to listen to the performance of the fund and to make sure that your interests are protected. We advise the Minister for Finance on national policy relating to the sector. We implement all government policy relating to the pension sector. We license the service providers that have been speaking to you, the custodian, the fund manager, the administrator, and the trustees, and the scheme itself. So those are the core mandates for UBRA. UBRA, as the regulator of the sector, has so far licensed 3 mandatory schemes. That is NSSF, Makerere University, and Parliamentary Pension Scheme. We have 48 voluntary occupational schemes, 14 umbrella schemes with 248 participating employers, and Icea falls in this category of umbrella scheme. We have licensed 5 custodians. You've listened to your custodian. We've licensed 5 fund managers. You had a report from the fund manager, so they fall in that category. 8 administrators, 4 corporate trustees. This scheme is managed by a corporate trustee. We also have the individual trustees, but for IC as an umbrella, they have a corporate trustee. So the regulator has licensed 4 corporate trustees. And then for the individual trustees with valid license, so far we have about 190 licensed trustees. For the AGMs, when I make it to the AGMs, I'm most interested in the members, because as a regulator, we interface with the different service providers, but we don't with the members. So an AGM is a good platform for us to speak to the member. So for the members who are here, I want to go through your rights. As members, you have rights when you are part of these schemes. One of your rights as a member is to know the rate of contribution if you're under AAR. Do you know how much the sponsor or the participating employer contributes? You as a member, do you know how much you're contributing? And what is the total contribution that you're making per month? And are they actually remitted? That is your responsibility as a member. Have the interest in this is your money. Have the interest and follow up your money. I usually tell members that it's easy to follow up on your money when you're how are they invested? And that's why you had the report from the fund manager and the custodian and the administrator. Members are also entitled to information relating to the cost of administering the scheme. That is information as a member that you're entitled to, and the trustees are available to give you that information. when we're in a working environment, as in you have different ages. So we advise that the trustees organize pre-retirement trainings, 10 years to 5 years to retirement, so that by the time a member is retiring, they know what they're going to face. They can actually plan for the retirement. There's no panic. All these, from if it's done or if it's conducted 10 years prior, 5 years prior, that is good information for someone to prepare for retirement. So this is your right as a member to have information regarding retirement. The scheme documents, you have the right to scheme documents, the financials, the trust deed, the investment policy statement. You have the right to access all these documents so that you know where the trustees are investing. You know the trust deed is the constitution of the scheme. So you need to know the rules of that actually govern the scheme. So just having a copy of this document, it helps you even to know the benefits that you're entitled to, when you should be leaving, when you should be paid. Those are some of the clauses that are articulated in the trust deed. The types of benefits that I've spoken to, then the vesting period. If you worked for a year, can you be able to access the employer benefits, employee or only employee benefits? But the regulation advises 2 years. So this is information that should be on your fingertips as a member, so that when you're exiting, you have the right information. You also have a right to assign the benefits under the regulation of assignment of mortgages for loans and regulation 2022. So a person who has been a member of a scheme for 10 years, that's what those. I know 10 years was it had some contention, but that's what was agreed on. 10 years may assign up to 50% of his or her benefits to purchase a mortgage or housing loan. That is your right as a member. When you discuss with the trustees, they should give you the details, or you can walk into UBRA. It's an open door policy and you get all the information you want. The dispute resolution mechanism. This is prescribed in the trust deed. As a member, you should know if you have a complaint, if you need help, where do you go, who do you go, how long does it take, just to know the process. The regulator has a complaints desk, and as I've mentioned, we have an open door policy. Any member can walk in and complain. You can complain about the regulator, you can complain about the trustees, you can complain about the service providers, you can complain about anything, and the regulator is there to make sure that your interests are protected. There's a regulation that is very interesting, where we don't allow the employer to encroach on the members' money. But what happens is the members take advantage of this, and now they want to steal from the employer. That one, the regulator will not be on your side, or will not want to protect, because there are no interest here, they are trying to protect. So we encourage for the members to apply integrity. If you've taken a loan, if you have an obligation with the employer and you are exiting, please sit on a table, agree that I have this much in the scheme, you can take this much, but don't run away just because there's this regulation. UBRA won't protect you with this one. We advocate that you apply integrity. As a member, you have a right to nominate beneficiaries. So in the event of anything, someone can actually come to Icea and claim for your for your money. Update this information with the trustees, with the administrators, so that in the event of anything, they know who to contact. We usually speak to the husbands. Please inform your, it might not be the spouse, but inform someone that you are part of a scheme under Icea, you're part of NSSF. You may not mention the figures, but for someone to have a rough idea of, okay, in case you know more, they know where to start from. But this is information that is usually sealed. The men go to the grave with it. But you can share with one or two people so that it's easy for the trustees on who to contact or to claim for that money. UBRA is, we have a 50% now, unclaimed benefits. That is one of the issues now we are battling with, unclaimed benefits in the sector. And so we are speaking to the members during these AGMs that please update the information, nominate beneficiaries, update their information so that in the event of anything, at least this money can be claimed. And lastly, this is what I was speaking to, Section 70 of the UBRA Act that protects the contribution of a member from attachment. You are obliged under your respective employment contracts to fulfill your financial obligations to the employer. Employees should uphold the obligations to the employers. So when you look at Section 70 of the UBRA Act, our Act regulations are all on the website. Please acquaint yourself with those laws. So if you look at that Section 70, it's protecting the member. Once you're leaving your employment, the employer shouldn't attach your benefits. But the regulator is also advising that please apply integrity. Don't run away from your obligation. The regulator won't be able to protect you. Thank you to the trustees. Thank you, Madam Chair. And thank you to the key stakeholders of this AGM, the members. Thank you for coming.
Thank you, Anne. Anne is really testament to the regulator that we know, very soft but very tough, yeah? But thank you very much for coming and for your remarks.
Thank you. Thank you to UBRA. Very insightful remarks. There was a query we thought you would respond to, and I think it was from Mild May. They wanted clarity on the 50% down payment on the medical. Yes.
Thank you. Briefly, the legal department is still drafting the regulations, so I'm not in position to advise the sector. Less the regulation will be out, the stakeholders will be consulted, and the final one will be distributed, dispersed with the trustees, and the information will trickle down to each member. But right now, I'm not in position to advise the sector. Thank you.
Thank you very much. So we'll now move on to the next item on the agenda.
Yes, Chair. Formerly, we had an item on declaration of interest, but Philip went ahead of us. So I would like, through you, to invite our guest speaker to take us through the financial literacy. I cannot introduce the next guest speaker properly. I'm sure he will introduce himself. He's called Mr. Ronald Edward Mukasa. He's the Director, Research, Innovation and Learning at Enterprise Uganda. He's also the team leader at Geuka Africa Limited. He has extensive experience in financial literacy, business development, strategy, as well as organizational change. He's a qualified FCCA And he also has a master's or holds a master's in development management from LSE, the London School of Economics. So, dear Chairperson, kindly invite our guest speaker.
Okay, as I invite the guest speaker, yes, Philip stole my show, my spotlight. This is the area I usually wait for. But we still have to advise the members on what the board has declared as interest. So for the year ended December 2023, that's 31st December 2023, the board has declared an interest of 11%. This is net of taxes credited into the members' accounts.
7.
And I will have you remember that in 2022, it was 10%. So clearly there's been some growth on that line as well. Thank you to all our service providers for a job well done. I think 11% is quite a good interest for the members. Thank you. So we'll now move on to presentation by the presentation by our guest speaker on financial literacy. You're welcome, and over to you.
Thank you so much, Chair. 7. Good morning. Is it still morning? 7. It is still morning. Good morning. I think let us clap for the 11% more seriously. Madam Chair, I'll just request, how many of us here you own property? You have a tenant. Anyone? Those who do put up, don't shy away. I know some of you own property. So let me put the 11% into context. So, for example, if you spent 200 million putting up your property, 200 what? Million. And you got a good Ugandan to pay you 2 million shillings per month, you would get 24 million shillings at the end of the what? At the end of the year. And of 200 million, what percentage is that? That is 12%, isn't it? Now, the people who put up their hands earlier, how many of you are getting that return? Because if you have a Ugandan as a tenant, chances are he didn't pay for at least 3 months in the 12, isn't it? So when they declare 11%, that's why I request that we clap. Because it is like a tenant who paid every month, isn't it? And you got 1% every month, only 1 month wasn't paid. For those of you who have real estate, I can bet you 11% is hard to pull off in what? In real estate. Very excited to be here. My name is Ronald Mukasa. I hope the presentation is up now. Madam Chair, thank you so much for the opportunity. I'll tell you a story about Madam Chair. I started out in the accountancy space, so I was an auditor for the first part of my professional life. And one of my audit clients was Madam Chair over there. So as a young auditor, they tell you that when you get an issue, be sure about your issue before you take it to the client, because the client may tell you that, by the way, you are very unserious. So I want to testify, Madam Chair, you are the one of the clients I was most afraid of. Before I brought issues, I had to be sure that they are in order. Help me welcome your neighbors. Say thank you for coming. I know that all of us are here representing the clients, isn't it? But the presentation is going to be specifically about you. And I hope that we can spend the next 30 minutes just reflecting on this question of retirement. I think it's an important question. I don't know whether you have noticed the word retirement is mentioned quite a bit it is up there on that flyer, a few other places. But how many of us can honestly say we have had a candid reflection about this concept? So I'm going to start off with a question. You can go to the first slide. The question I'm going to start off with is, should one retire? And I want you to reflect at an individual level. Should you retire? Do you have an answer? How many are of the view that one should retire? Put up your hands. Huh? I hope you notice how few the hands are. How many of you say, I don't think I should retire? Put up. How many people are on the fence? They don't know whether they should retire or they shouldn't. Put up. Now, I'll tell you why I start with this question. This question is very important because it is a question which you have to answer as an individual. Your employer is sure about the answer to this question. He has usually written it into the what? The document. He has said that if you turn 55, for example, or 60, you will what? Retire. The employer is sure. The employer actually is not even debating whether you should retire. They are just counting your age. They say you are close, you are out, isn't it? For those of us who work in places where we have contracts, the contract expires and you are temporarily retired, isn't it? But the idea is that you, the person who is supposed to retire, have you answered the question? Because that's the employer's decision. The employer has decided that you have been retired. Are you going to what? To retire. Because it puts into context this whole debate. The debate which we have to have, and I'll tell you that people are very divided on this question. There are people who are of the school of thought that I will work until my mental faculties can't hold it. And they are right. There are people who are looking forward to getting to the age of 60 and they are going to have a holiday for the next 25 years. However, whichever position you are, I would want you to walk away from here. I don't want you to answer this question here, but I want you to reflect on it and ask yourself, what is my game plan? What is my game plan? Because some of you here, actually retirement isn't even on your spectrum. You may change jobs. If the employer doesn't want you, you will repackage yourself as a consultant and come back to the market. And you will spend another 40, and you will find a way of keeping in there, isn't it? For some of you, you are saying, I am finished. Are we there? Now, I'll tell you a story here. My mother has been retired since 2004. And I'm the last born in my family. So at that point, she gathered all of us, her children, together, and she said, you know what, you people, I'm retiring. I've served the world, I've served you guys, I've taken you to school, I'm retired. It seemed like she was saying bye to us in life, isn't it? So we remember telling her that, you know what, Mommy, the problem is that this retirement thing takes long. It actually takes a very long period of time. Now, if you count, 2004 is 20 years ago. A full 20 years, that's the time you take to study and finish. Get to university, isn't it? And we need to understand that when we talk about retirement, it is one of those things that takes quite a while. So answer your question, should I retire? Let's go to the next slide. Now, for most of us, we have a very basic financial journey. We want to do some basic things. Most of us in our how many of you have the privilege of being born as a royal? Umulangira. Any balangira here? Even balangira nowadays are struggling. But anyway, the point is that the idea was that if you are born a prince, for example, your father first of all hands over some lands to you, isn't it? Now, many of us don't come from such a family. Actually, you start off with, most of us start in a very modest environment. And that's why many of us have had this speech from our parents. Have you had this speech which says, I have given you your inheritance? It's usually during graduation. They say, I've given you your inheritance. I have educated you. That is your inheritance. Now, your parents are not joking. They're telling you the truth. Actually, that is the inheritance. They have what? They have given you. So you get an education, you land a good job, you hope that you build a beautiful house, you hope that you start a family, and you educate that family. We want to drive lovely cars, and usually we have to take a bit of debt to enjoy these privileges. But the point is that what I want to share with you is that when you look at any average person in the corporate world, this basically sums up their financial journey. And why is it important to understand? It's important to understand because you find very few people who their grand plan is to own a building on Kampala Road. People just want to have a respectable life. That's what we want, generally. There are few people who want to make lots of money, but for the majority of people, it's just a respectable life. However, even these basic things are very challenging to come by. Just this year, there was a study which was launched by NSSF. I believe some of you participated in it. The study was one of the findings of the study was that one of the second biggest use of NSSF money. Who can guess what it was? And just shout out what you think NSSF money should do. Build a retirement home, business. Now, let me tell you the second one, and I heard it, someone whispered it. The second one was actually paying school fees. Now, it is such a fascinating thing that even at the point of retirement, most of these basics have not been ticked. Because the retirement package presupposes you have produced the children and they're out of school. But the fellows are still around. Nowadays, children have a habit of studying and living off you for a period of time. And that challenge persists. So when we think about these basics and our journey to retirement, we are saying we need to make sure that we get to a point where some of these boxes are ticked. Now, let me tell you why it's a dilemma. You can go to the next slide. Why it's a dilemma for those of you who are here is that most of you who are here and the people you represent, you are also the most celebrated people in this country. Did you know? How many of you have heard of a program called PDM, Parish Development Model? How many have heard about it? Now, I'll tell you a bit about Parish Development Model. One of the general ideas, and I think what you have heard, is that they are going to send 100 million to every parish, and they are going to give 100 people 1 million shillings every what? Every year. But do you know how many Ugandans, the biggest success of Parish Development Model has been to receive 1 million in full? I don't know whether you understand it. There are very many Ugandans who have lived until they are 35 and they have never received 1 million shillings intact in one transaction. So if you are a Ugandan who receives more than 1 million shillings monthly on a consistent basis, you fall in the top 1% by just that. And that's why we celebrate you. When we talk about why most of you live a financial life where everywhere where you turn, people tell you have already arrived. Some of the jobs you hold are actually the dream jobs of people. Those are the jobs people pray about. They say, God, if you give me that job, I will never ask you for anything again. That's it. You are the one who has that job. Are we on the same page? So we celebrate you. And when we celebrate you, it means that it also takes your eyes away from your retirement. Because everywhere you turn, people tell you that you have already arrived. That's why when you look at an average person, for those of you who are here, when you look at the position you hold in your family, people actually are totally convinced you are going to live the life you are living for the rest of your life. They even get very annoyed when you say you are struggling with money. Have you noticed? When you tell them, when you call a friend, when I call you and I say I need 200,000 and you tell me you are struggling because of 200, say, but you are just a mean man. You who gets 4 million shillings in cash, it's not you. So that celebration has a problem. And you go to the next slide. For most of us, you have already reached the promised land. And I want this to sink in. You need to understand that most of us live financial lives as though we have already arrived at the promised land. For the majority of people who look at us, they are actually convinced that we have already succeeded. That's why you can't pay attention to retirement. Because when you look around, how bad can things be? Are we on the same page? So why the retirement story is very difficult for most of us is because, quite honestly, the society around us keeps reminding us that we can't be worrying about money because we are the ones who have it. Yet it possibly is true that when you look at it at an individual level, you don't believe it. You yourself, you don't what? Believe it. However, everyone else believes it on your behalf. So we need to understand that the context in which the retirement story is told is a context where those of us who are part of these schemes are also possibly the most successful in the society. And the society keeps reminding us that if we have succeeded, how do we worry about the future? It is certainly well organized. You get that? So the risk which you have is to say, I understand that this is what society is saying, but is it true about me? We can move the next slide. So there are three big questions I want to address today on this subject of retirement. The first question is, shall I make it? Shall I make it to what? To retirement. That's an important question. The second question is, what shall I do if I make it to what? To retirement. The third question is, shall I afford it? Those three questions are what we are going to look at. Let me quickly turn to the first question. Shall I make it? You can move. Shall I make it is the first question. So you can go to the next slide. I wanted to share these numbers. This is a statistic of 2001. It possibly has changed. The life expectancy of an average Ugandan today is 66 years. I want you to take a quick experiment. If you have a piece of paper, you all have notebooks. I want you to write 66 and below you write your age. So if you are 40, you write 66. Then below you write what? 40. Are we there? Have you written? Then I want you to subtract your age from 66. Have you seen the number? You have seen the number? You have looked at it? If you have seen the number, I want you now to find out which year it is. Now I'll give you an example. For example, if you are 38 right now, 66 minus 38, you are 28, isn't it? Is it 28? No, 66 minus 30 minus 28 is what? That is 26, isn't it? 26 plus 24 is what? 50, isn't it? So you are going to be alive by 2050. Have you understood the experiment? Just look into the future and say, 2050, I will be here. For those of you who are 30, you may be around in 2060. According to these estimates. I want that to sink in for a moment. Because when we think about retirement, we actually think it's not going to arrive. These are statistics of right now, and they are improving. And if you think that you are the Ugandan who will die before 66, I want to warn you, you are the Ugandan who has health insurance. The majority of Ugandans don't have health insurance. You who has health insurance, chances are very high you will fall above the 66, isn't it? The other fellows who bring the average down are the people in the village. But you are going to be with us in 2060. You will see a post-Museveni Uganda. You will be there. Is that clear? And if that is the time horizon we are planning for, the question you have to ask yourself is, I am going to what? Make it. And I hope that when we go back to the teams which you represent, because I know you are here as representatives, I want to submit that I believe most of the people you are leading are young people. And they need to look at these numbers and understand what those numbers make. Do you know how many people receive the death benefit, the survivor benefit? Survivor benefit in NSSF is the benefit you receive because the owner of the item died. So if, for example, you have an NSSF and you die and your wife takes it, that is called survivor's benefit. Less than 0.5%. And why? That's the number. So we need to bring the discussion that actually people are living longer, and even though we don't plan for those years, the years are what? Coming. Let's go to the next question. The next question is, what shall I do? What shall I do? There are two things. Oh, just before, shall I make it? I'm going to make these points and then I'll wrap up. Point number one is that to live to 66, health is an important thing. I'm not a health expert, but health is important. Retirement, one of the biggest cost drivers is what? Is health. So it helps to keep your lungs okay so that they don't inconvenience you in old age, isn't it? And the rest of your body parts. The second one, you can move the next slide, is relationships. And this is an important one. One of the things which can accelerate you to death is a bad relationship. Now speak to my brothers, the ladies you can keep, just don't listen to this one. But we are the ones who have had a habit of sabotaging our retirement towards retirement. You know, you start a new family, you find a new brilliant wife who makes you feel young again. Then the fellow delivers to you some 3 children, and you are taking children at 66. You will get pressure and diabetes. Are we on the same page? But managing relationships is actually good retirement planning. That's the point. And there are people who share on this subject, but we need to understand that retirement planning goes beyond just the money. So let's go to the next question. The next question is this. What shall I do? I want to challenge all of you, assuming you had the annuity which Icea has talked about. You have the annuity which gives exactly your salary. Are we on the same page? You have been having a paycheck of 5 million. You have your annuity, it gives you 5 million into your retirement. What shall you do? Do you have an answer? What shall you do? Assuming money was not the question. The money keeps coming. Let's say your employer retires you but says, I commit to remain paying your salary even though you don't need to come to work. What shall you do? Friends, that question has to be answered right now. Because I told you about my mother. She hadn't yet answered that question. For her, she found solace in the church. I come from an Anglican background. In Anglican backgrounds, we have Omukebezi. You have people who do work. They are ushers in the church, then they are in Mothers Union, then they are in Christian Women. She has been on every executive for the last 20 years, and she keeps rotating. But it keeps her alive. That's what she does, isn't it? She possibly needs plan to do that, but she has found solace in what? In church. The question is, what are you going to what? To do. And friends, this is an important question. You need to discover yourself beyond the job which you are currently holding. Because some of us can't identify ourselves outside the job which we are doing. And if you can't identify yourself outside the job, then you are going to have a what shall I do problem. You don't want to be a retired person who keeps coming back to office. Then you say, you people, who changed that table? I told the people when I was here that the table has to be in that corner. But now, you don't want to be that guy, isn't it? So you need to make sure that you have answered the question. If you are going into farming, please start a bit of that. If you say you are going to write a book, show us a bit of what you have written. But make sure that you have answered the question of what shall I do. I want you to go back to your workplaces. You can go to the next slide. I want you to go back to your workplaces and do a small experiment with your staff. You say, I came from this meeting, they asked me to do this experiment. The experiment I want to do, you ask a question. Assuming we kept paying your salary for a whole year and you didn't have to come here to work, what would you do? Let people write it down. Because friends, one of the causes of depression, especially in retirement, is some people can't tell themselves away from their job. It is the only way, especially for us men. Ladies can go home and they organize, they keep busy. For men, it is such a big thing when no one calls you for a serious meeting. So you need to ask yourself, what shall I do? And set it up. If you are into education, you want to run a school in your village in Serere, let us see you start that school right now. Why? Because it's what you are going to do. Otherwise, if you haven't answered the question, chances are, even though you have ticked the money question, this may be a problem. Let me go to the final one, which I think I'm going to spend a bit of time on. Shall you afford it? Friends, this is a very important question. Because we had, you remember when we had a general retirement earlier, a couple of years ago. You remember this COVID season when the president decided to retire all of us. If your thing was, if you are not called an essential worker. You remember the word essential? Most of us thought we were essential workers. We were not on the list. We were shocked. The president said, I am not a what? An essential worker. But you remember that the people who were sent home, you actually noticed that, can you afford this retirement thing? Are we on the same page? Because you know, when you keep going to work, depending on the workplace you go to, some people go to work and every time you go to work, money which is not your salary appears. You get some per diem to go up country. You keep alive, isn't it? But when we were exposed to the full bills of our households for 1 month, people said, President, open us. COVID we can fight, but let us go to work. Because when you think about it, can you afford it is the toughest of what? Questions. Let's move. So the first thing which I'm going to share is, can go to the next slide. First thing which I'm going to share is that personal finance is 80% behavior, only 20% head knowledge. This is not my quote, it's a quote by a guy called Dave Ramsey. However, the argument which he's making is that your personal finances actually are a factor of your behavior, not your knowledge. Personal finance math is very simple. They have shared with you the products here. I don't know whether you saw the slide which had annuities, this. Very simple, straightforward things. The knowledge you have. The signing up can be very difficult because it's a behavior thing. So you need to understand that the battle which you have is a behavior problem. And friends, have you met someone who every problem they get, they need to borrow? Do you know a guy like that? Who borrows for everything? They even borrow lunch. Like lunch arrives, they don't have money, they say, I'll eat it on credit, I'll pay you tomorrow, isn't it? But the point is that that's a behavior issue. There are people who don't borrow that much. Have you ever met someone who is afraid of borrowing? You tell him, take a loan, he says, people are taking people's buildings. They say, but you are borrowing 1 million, it's not a building. He said, no, buildings are being what? Taken. Are we on the same page? But the point is that it's a behavior issue. You can move the next slide. So, what's the goal? The goal is this thing called financial independence. It is the status of having enough income to pay one's living expenses for the rest of one's life without being employed or dependent on others. Did you hear what they talked about replacement ratio? Now, I'll tell you a simple one. I was doing this session in a certain financial institution. So there was a guy who was a driver in that financial institution. I told him that about financial independence. He said, I think I'm about to achieve financial independence. He said, explain it to me. He said, you know, I am a driver here. I earn 600,000 shillings per month. I said, oh, congratulations. That's good pay. He says, yeah, I earn 600,000 shillings. But I've managed to build 5 Mizigo. How many? We all know what Mizigos are. We all know what a Muzigo is. Muzigo is those one-room houses, isn't it? So he had built 5 what? 5 Mizigo. Said, I bought my land. He had worked for about 10 years at this point. He had built 5 Mizigo. Said, oh, so why do you think you are financially independent? He said, you see, me and my family live in one of the Mizigos. It's longer on the L, isn't it? Then this side of the L has 4 Mizigo, isn't it? Each Muzigo, I get 150,000 per what? Per month. Are we on the same page? 150,000 times 4 is 600,000. He said, I actually earn from those Mizigo exactly what I am paid for my what? For my salary. And he said, even though I lost this job, my children wouldn't notice. His children don't go to Kampala parents, by the way. They are not in very powerful schools, isn't it? But they go to school. So when there is this thing which was mentioned casually here, that there were many retrenchments, when there is a retrenchment, Who do you think panics more, the driver or the MD who he drives? Are we on the same page? Because the driver is at 600, he has done his income replacement for 600, isn't it? He's close to financial independence. Not the most perfect model, but yes, it is. For the MD to pull it off, the MD earns 30 million, isn't it? He also finishes it, isn't it? His children also go to schools, isn't it? There are many schools which can swallow 30 million. See, schools come according to what you want. So this school which swallows 30 million, for the MD to pull off what his driver has done, even in the real estate sector, he has to build a long apartment block with 30 apartments, isn't it? And find 30 Ugandans who give him 1 million each month for him to pull off what his driver has done. Do you get my point? And that's what that's the goal. Friends, it is important that this is on our top list of financial goals. To say one of these days I need to achieve financial what? Independence. And I tell you, every workplace has a financially independent person. Have you ever met someone who doesn't notice the payday? They don't know whether their salary has come or it hasn't. Do you know a workmate like that? They are very annoying workmates. You are complaining, these people, it's 25th, they haven't paid us, what are they doing? The fellow says, oh, so they usually pay on 25th. I didn't know. Are we on the same page? There is that Ugandan. But the point is that this is the goal. Now, let me tell you, this goal here, I want you to take it back to your members. That we need to see that in these 10 years I'm working, I achieve financial what? Independence. If you, for example, if I right now, I have enough resources to say I can buy an annuity, which pays exactly my salary, I have achieved the goal, isn't it? My salary has been what? Replaced. And there are many other methods you can use. But ideally, this is the what? The goal. Let's move. So, this goal here, as simple as it seems like retirement is a tough thing. This was an article which came out not so long ago. And it said 1,000 civil servants apply to reduce their what? Their age. Now, people in the private sector don't think civil servants are bad people. The private sector systems are just better. They won't allow you to reduce your age, isn't it? But what these fellows did, they wrote a letter to the civil service and said, you know what? You thought I was 59? No. I am what? I'm 52. Are we on the same page? Now, you may think that this is political propaganda. This was reported in New Vision. It wasn't even in the Monitor. It was reported in what? In New Vision. But these are people approaching that retirement age. And you say, friends, I'm not ready. Give me 4 more years and I organize myself. Are we on the same page? So you need to share with your colleagues that retirement as it approaches. Friends, every retirement meeting, the young people can be on their phones. They are saying, you know what? The people who are approaching it, the thing is real. And you know, in the civil service, they write for you a letter. 2 years to, you are left with 2 years. 6 months to, you are left with 6 months. 1 week to, they say your office start clearing it out because on that day, and in the civil service, your whole life is withdrawn. If you had a public vehicle, they take it. If you had a fuel card, they take it. Everything is taken. Then soon you have the reality of being alone. So we need to get people ready because people are not what? Are not ready. Let's move. So that's the dilemma. What are the traps? What causes this dilemma? I'm going to go through 7 traps quickly and I'll wrap up. Trap number 1. Trap number 1 is this thing called no plan, no budget. Friends, I believe and I would like to submit to you that most people live paycheck to paycheck because they actually never sat down to count the cost. A young person is given a job in your workplace. You promise the young person that you're going to pay them 1.5 million. That is gross. Net is 1 million, isn't it? The 1 million, you find the young person is walking through Nigeria looking for an apartment of 1 million shillings. Are we on the same page? And you just told him the letter shows you are going to earn 1 million shillings, isn't it? Is that clear? Yes. Now, why are you checking on apartments of 1 million shillings? Say, no, but they are good. Indeed, they are good, but you can't afford them. Are we on the same page? I want you to run through, and I see a number of senior leaders here in your workplaces. I want you to take off one afternoon in your workplace and tell people, let's count the cost. Put your salary down and break it down. Because people are doing things which are miraculous. You are earning 1 million shillings. You are living in Nigeria. You are driving a car. How? Unless you are being subsidized. And if you are, is that also the best approach? But the point is that you find that the young man is shocked that he's in debt. But say you were in debt even before you started. Because there was no plan, there was no what? No budget. I was once doing a session like this somewhere in Barara, and part of the audience, it was for a diary group, so part of the audience was a Dutch girl. So the Dutch girl came to me after and said, so you Ugandans sit down and you talk about money like this. See, but for us, those are things which we talk about every day at home. Said, when I was 12 years, my mother would give me my clothes budget. They give an advance for clothes for a year when she was 12 years. So your mother at 12 comes and says, you young man, I'm giving you 200,000. It is for your clothes this year. Now, if you go and take ice cream with all of it, it's your decision. But don't expect to come with her for a party if you have no clothes, isn't it? Because they gave you your money, isn't it? Every time she sees you dressed inappropriate, she says, oh, but I can't take that. But you took your money. So, but mommy, buy me a dress. She says, no, no, no. You took your what? We need to embed the plan into. Can you imagine our organization starting a financial year without a budget? Is it possible? Yet all of us start our personal financial years as they are. Say, God will see us through. But how does God see you through? Yet he has at least given you a bit of information about what is happening next year. Like you have a job which has a salary which has been promised for at least your contract period. So that's trap number one. Trap number two, you can go to the next one. Assets versus liabilities. I'm going to talk about two things specifically. I'm going to talk about education for children. Is it an asset? Is it a liability? And I know there are very many accountants in the room, so I am asking this question. What is education? It's an investment, so it behaves like an asset. Is there a consensus in the room that it's an investment, it behaves like an asset? I'm an accountant by back. You see, every time an accountant, you tell him he's an asset, the only question they ask you, show me how it will bring money. If you can show it, they will accept, isn't it? Actually, accountants can change things which were assets into liabilities if they stop bringing money. If something was bringing money and this year it's not bringing money, my brother, the auditor there, will come and tell you, this thing, we need to downgrade it. It's no longer what? An asset, isn't it? But yet, education is by far the biggest investment made by most African families, and for sure Ugandan families. However, the question is, how do we write it in our books? Because it is true that education is an asset. The only question, it is whose asset? Are we on the same page? The fact that I don't book an asset in my books unless I can prove that it is mine. Are we there? If you can't prove ownership, our accountant friends will tell you, don't book it in your books. You can't book an asset. And most people have booked education in their what? And you come from a generation where you are clearly the assets of your parents. When we asked most of your parents about their retirement plan, they said, one of my sons is an engineer. The other one is a doctor. Two of them are accountants. I can't suffer. And the truth is that you have proved it. It actually works. Because our parents took a big gamble They say, let me educate this child when he breaks through. And the truth is that most of us, this generation of ours, you still feel guilty. You say, the old man is sick, let me pick him. We do that, isn't it? So at least for them, the education they gave us was actually an asset. Now, I want to warn you about your children. These children, if you are attempting to replicate what your parents did for you, you are living a big lie. Because education is an asset, but it is an asset for the fellow who receives the certificate. He's the owner of the asset. And if he's the owner of the asset, he can use it how he pleases. Now, if you sit back and you say, my retirement plan is the 4 children I've educated, my friend, you are going to be surprised. Your children, first of all, are global citizens. These Gen Zs who you are seeing on the streets in Kenya, they are not a joke. They live a life in the US, they are on the streets of Nairobi, but they are always crossing. So when you ask your child what they're aspiring for, they say, you know what, I want to go and work in Dubai. So there are very many amazing jobs there. And they will disappear to Dubai. Now, how you send your son a message that you have a malaria problem, and the fellow is somewhere in Dubai, somewhere in Bahamas, he will send you a video of a financial literacy talk. He says, Mommy, you have to plan for your own retirement. How do you expect us to be your retirement plan? And you'll be a very angry old person. You know when you're angry old, in Luganda they say, Akule Ntondo. You just start saying, Abana Twaba Somesa, they are not looking after us. But you are telling yourself a lie. Are we on the same page? We need to understand that educating our children, for us, in our books, we book an expense. You just say, I've expensed, I've educated them. If you are lucky and they come back, God bless you. But if they don't come back, you don't have a written contract with them. And we need to understand that this is one of the things we need to break. That is trap number 2. Trap number 3. You can move the next one. Next trap is this thing called the status burden. And this is very important. I need to inform your members when you go back. The status burden is when you become fused with your office. You and the office become one. How many of you, some of you have the privilege of using an office car. And I'll tell you about an office car. It can be very deceptive. You drive around Kampala, and when it's very hot, you just put up your windows and you do air conditioning. Isn't it? Usually, the roads are bad, but the office car has a way it runs over them a bit more peacefully, isn't it? But the truth is that if it is your car, you have to ask yourself, am I lost in the office? Because you can be lost in the office. Have you met people who, even in their homes, they introduce them by their titles? This is Professor Mukasa. Friends, you need to accept that you and Professor are 2 different people. You are on each, you are different. And I want to challenge all of you, make an experiment. Every time, go downtown. You go back to the taxi park, you walk through, you see what has happened downtown. Because if you forget it, retirement can be tough. You don't even know where your taxi is parked. And the illusion of your office can make you walk through Kampala and you don't know that Intinda taxis no longer stop in some places. You need to keep reminded that before the office you were one person, the office came, enjoy it, and you made crossover after. Are we there? Have we understood the status problem? Number 4. Number 4 is an interesting one. You can move the next slide. This idea of playing God in your what? In your family. Friends, the problem, and I told you about being celebrated earlier, when you are celebrated, you take the position of God in your family. Some of you are so powerful in your families that you determine people's family matters. People say, you call uncle, and we hear what he has to say. You call him. Do you know there are some of you who don't, until you arrive, burials don't start. They say you wait for him, let him arrive. But the truth is that the problem with this is that you are not God. You can't solve all the... people talk about black tax, and I agree. The family usually puts a big weight on you. But I believe that you also enjoy that weight because they have started calling you powerful names. You are barely 40, but they call you Muzei. Muzei, what do you have to say? And it's a powerful thing. You grew up, they were not taken seriously, but nowadays the whole family keeps quiet and listens to your ideas. As long as you are going to contribute after. Friends, you are not God. You can't pay school fees for 20 children. It's impossible. The math doesn't work. And we need to inform our families of this reality. That you can't be Kamalabi or in your what? In your family. Don't take that position. And if you are in that position, friends, I submit to you, walk away from it. Tell friends that, you know what, the truth is, even me, as you see me here, the best I can do is to bring 500,000 to the family. That's it. Some of you people plan, young nieces of yours are planning weddings against your salaries. You don't know. They are telling their boyfriends, don't worry, auntie will. When auntie brings like 3 million, then the rest of us will add and we will start there. You don't even know that they are about to get married. They will announce to you they're getting married after they have planned for you. Some of you can't give a contribution of 100,000. You would collapse. You try to say it and it doesn't come out of your mouth. Say, I'm going to give 1 million. You fail to say 100,000 shillings. Are we on the same page? So, don't be God. Are we there? Number 5. This is a big one, the gambler mindset. Our friends here have just submitted to us that we received 11%. People clapped, but people want to receive 20% per month. And when someone comes and submits to you, have you heard that you can be able to grow chicken? And when you grow those chicken, you can be able to earn from them 20% every month. People say these people of Icea are telling lies. I can make money. That is the gambler in you speaking. Now, I want you to know all of us have a gambler inside us. He just needs to be activated. I don't know whether you saw this thing called Capital Chicken, not so long ago. You saw it. Now, the truth is that chicken is very good business. It is actually it's a good business and a profitable business. But it can't do what Capital Chicken was promising. Chicken can't do it in Kampala here, in Uganda here. It can't. But people believed it because the gambler was activated. There was this article, Ugandans lose 60 billion in football Ponzi scheme. This thing was called BLQ. People were on the phones. Just go to the next slide. There was another one. 1,500 Ugandans lose 10 billion in online scam. In 3 months, I tell you, every year, there has to be a group of Ugandans who come together to lose their money through a Ponzi scheme. It's consistent. They change faces. And as soon, the first people they target are people who are saying, what is Icea giving you? 11% per year. Do you know that I can give you 10 every month? Every week, actually. Say, for real? Bring it, then we hear you saying, give me my money, draw it. People have put NSSF in there. I believe that some of the Icea money which has been drawn has ended up in what? Don't let the gambler win. Don't give him the steering wheel. Are we there? Number 6, economic outpatient. For those of us approaching retirement, one of the most painful things in retirement is to retire and keep supporting your children. Now, what's economic outpatient? It's a concept which was shared in a book called The Millionaire Next Door by 2 guys called Stanley and Danko. And they argued that economic outpatient is supporting your children way into their adulthood. You give them the first degree. They say, I want to upgrade. You give them a master's. They say, but I think I need to get one more certificate. You give them a certificate. They say, okay, now I'm ready. But I think let me first get married. You marry them a wife. They get married. Then they have twins. One of the twins has your names. You start paying school fees for the twins. You are giving what is called economic outpatient. Now, friends, if there is anything threatening your retirement fund, it is those children. I want you to go back tonight and announce to the children. Tell them, you fellows, you are leaving at 18. 18, you go. You are going. You're going. Remind them. Don't get your children start saying, this is our house. I will come in our car. Let them never make that statement. Have you had your children make that statement? That, don't worry, I'll pick you in our car. And whose car? A fellow who has never earned 10,000 in a day, he's announcing that he owns a Land Cruiser. He doesn't. He's just an extension of the parents. You see a number, I mean, not for very far here. You just go here to Acacia Mall. You find a fellow spending money with a lot of, with no guilt at all. Someone jumps from KFC, passes, watches a movie, spends the whole day in the mall. But you look at him and you say, but where is the money coming from? This is a fellow who has been fixed on economic outpatient. Now, if you announce to this guy that you have given him a job, and the job is going to take him somewhere in Zombo, and that job is going to pay him 800,000 shillings, he'll tell you, but what can 800,000 shillings do? And he's right. Because 800,000 shillings is not a lot in Acacia Mall. But if you are real Ugandan, 800,000 shillings, there are many fighting for it, isn't it? So you, the parent, this one is on you. Don't cause economic what? Outpatient. Finally, debt. Debt. Debt doesn't start in banks. Debt starts from family and friends. You borrow from an auntie, you borrow from a brother. Then you borrow from workmates. Do you know that workmate who has borrowed from everyone? You meet at lunch, say, hey, this man also has your money. Hey, he has your money. Hey. The truth is that what if you don't have the discipline to plan for the money, usually you have to end up in debt. And friends, if there is anything which threatens retirement, it is debt. Some people have to actually take a loan to be able to pay the loans back. Now, people say debts from friends and family are not expensive. They're the most expensive because they are underwritten by trust. When you borrow from a friend, he doesn't charge you interest. The interest is trust. And that's the problem. Some people, you say you are looking for 500,000 shillings and no one in your family can trust you to give it to you. Says that my family doesn't care about me. No. Your family has learned the lesson over the last 40 years that you are not credit worthy. They're not bad people. I encourage all of you, if there is a session on money you want to have this year, specifically, I want you to have a session on debt management. Because I can tell you there is one of your workmates, one of the people you supervise, who people are looking for him. Money lenders are coming to office. And some of you are HR people, you have received money lenders. So you need to say, we need to shift from this. So let me close by making a couple of proposals. The proposal I'm going to, you can go to the next slide. I'm going to propose a way forward, then I'll wrap up. I'm going to propose what we call the three cooking stones model. Amasiga. Those of us who grew up in the village, you have seen those stones, isn't it? The three cooking stones. That every time you get money, these three things have to happen. You can't cook the meal on 2 stones. You can't cook it on 1 stone. You have to cook it on what? On 3. There is no stone which is more important than the other. You have to save some, you have to spend some, you have to give some. That's the three cooking stoves what? Model. The work which we are doing here, what brought us here is in stone 1. Saving some of the money, and it grows. Are we there? Now, if the 3 stones are working, chances are very high that people will be in financial order. Let me summarize them with this. You can go to the next slide. Some people call this the 5 Jewish jars. You see the giving, the spending, the what? The saving. You see the 3 stones. So, I'll start with stone 1, which is giving. This is one of the most religious countries you will ever find. Everyone has a faith. Everyone. It doesn't matter. People can disagree on which faith, but at least we agree on one thing. We all have a what? A faith. This giving stone, they argue that there are 2 places you can give. You can give to your creator and you can give to others. Two places to what? To give. What do Christians call it? What do Christians call it? What do Muslims call it? Zakat. I don't know what traditionalists call it, but they also have something they give. The giving is so consistent in every faith. Now, I'm not here as a man of faith. I'm just here to submit to you that if you practice what your faith does, you actually, usually, you understand money better. I want you to go to your place of worship and find someone who understands this concept and sit down with them privately. You go to your church and find someone who gives tithe. And tell him, you man, you give tithe every month, for real. So you earn $1 million and you bring 100,000. You say, I want you to sit down with him. Because the truth is that the people who understand that in this world we are, our circumstances are not driven by just our effort. There is some kind of cover. Someone who allows you to even get the job. That's it. And people define it differently. But that package. So give to your creator. Usually people who give to their creator, by the way, find it very difficult, very easy to save. If you are struggling to give God's money, saving in a circle is hard. Oh, are we on the same page? So you need to understand that give to your creator, then give to others. Be generous to your family. It's okay to pay school fees for some people. Some of us come from families where there is so much pain that we need to give. It is okay. There is nothing wrong. It's a good thing. But give on a budget. Are we on the same page? You say 10% I am going to what? To give. Next stone is saving. Two purposes of saving. There is saving for emergencies and saving for investments. Saving for emergencies, the entire insurance industry is actually built on that one concept. The idea that I don't know whether my car will crash, so let me put aside some little money. In case it crashes, I am what? I'm covered. People tell us that we should have an emergency fund of at least 3 to 6 months. 3 to 6 months. So if you earn 3 million shillings, your emergency fund should be 9 million what? Shillings. I want to submit to you that even though you don't have an emergency fund of 3 to 6 months, challenge yourself to have an emergency fund of 1 month. Let me explain what it means. It means that you start allowing your salaries to meet. The salary of June should have an opportunity to interact with the salary of July. Because some people's salaries have never met. Every salary thinks it is the first. It arrives on the account, says, I'm the first here. There is no evidence that there was anything before. Are we on the same page? And that's what an emergency fund is that you keep some distance between yourself and chaos, isn't it? So I want to challenge you, and I want you to go and challenge your workmates, the people you represent here. I want you to tell them, let us set out. There are products which Icea has, I believe, which can be able to do that for you. And you just set out that I'm going to have 1 month, just 1 month like this, as an emergency fund, which is my salary. So that I say that the salary of June will wait for the salary of July before I eat it. When July comes in, they shake hands. They say, I hand you over. You eat July, you eat June. Then July waits for August. Because that gives you, some of us are so close to the edge that if the check is not paid on 25th, people look at the accountant badly. Say, why aren't you doing your work? Are we there? You can't give the accountant 2 days. He can't make mistakes. Are we there? So that's the emergency fund. And then save to invest. Part of the products which we were shared with here are investment products. The money keeps what? Multiplying. Now, it doesn't matter where you choose to invest, and that can be debated. It's a session of itself. But that stone needs to be there. Then you spend 50%. Simple idea. Are we there? Now, the 3 stones can work, but most people say you don't understand. The money I get now can only look after 1 stone. The spending what? Stone. It's the only stone which you feed. The rest are just empty. But I want to challenge you. Can go to the next slide. I like this analogy. It's called the 2-letter test. If your boss calls you into office today and offers you 2 letters, he says, I have 2 letters in front of me. One of the letters is an offer of half your salary. It's blue, half your salary. You have been receiving 10 million shillings. I'm offering you 5. Are we there? The other letter is your termination letter. Pack your box and leave right now. Which letter do you sign today? Have we understood the question? The letters are just there. 2 letters like this. Blue, red. You tell the boss, but I'm the most hardworking employee. He says, I understand. I'm also the most hardworking boss, but I've already signed my letters. Now it's your turn to what? Sign them. Which letter do you sign today? Friends, some people are ready to sign the red letter. They have been looking for an opportunity to leave this organization. They haven't gone. They say, you have insulted me too much. I've gone. I'll find other work. But if you think about it and you are driving out of the parking lot, or you reach your wife and your wife says, you signed which letter? Go back. Go back and ask the boss to say if that letter is, if you are even considering the blue letter, if you are considering it, there is a problem. There is a what? Because if you are willing to accept the blue letter, then the 5 jars work. Because the 5 jars are the blue letter. Spend half. Friends, when they give you the blue letter, all of us would change. If you left at home when you had ordered for 3 chickens, you will call the fellow. Say, have you reached the market? Stop. Buy beans. Buy beans. Beans are good. Better proteins. More healthy. Buy. Are we there? We would change immediately. If your son calls you and says, DSTV is out and I'm watching Euro, says, you man, do you know how good the free-to-air channels are? Watch them. There are very many educative programs on free-to-air. Why are we buying DSTV West? You would change immediately. Your colleagues would see you walk out of the parking lot. Say, boss, you are with us today. Say, no, me exercises. I'm just want to do exercises. Everything would change. I've been using this analogy for about 10 years. I'd never see it come to life the way it came to life in COVID. In COVID, it was real. People were actually getting blue letters and they were thanking God. A friend would call you and says, you know what? God has been kind to my family. They have offered me half my salary. Let's thank the Lord. You pray with me and we thank the Lord together for what he has done for us. Are we there? Friends, all of us, the blue letter can work. And you need to tell your colleagues that if the blue letter came, you would sign it and you would change. The only question is, can you change without the blue letter forcing you? Can you give the blue letter to yourself? Allow me to wrap up. My time has run out. You can go to the next slide. Prepare your family for retirement. Your family needs to know that one of these days you are going to retire. Announce to your family. Because your family may not understand what retirement means. Make sure that they understand that you may not have the luxury of just walking into an ATM. How many of you are planning to retire into consultants? If you are planning to retire into consultants, I want to tell you, I'm part of my work, I'm a consultant. Now, I'll tell you about consultancy. Consultancy, people don't pay you on time. You call someone and say, hey, what's up with my check? Say, no, you man, just be strong, be strong. 3 months later, the money falls there, isn't it? It's not as organized as a paycheck. You know, a paycheck is organized. Say, 25th of every month, I'll get my what? My paycheck. But if you are going, and if you want, consultancy is just business. But friends, you can sit in a hardware for 2 months, and you are selling. The next thing you take stock, the bars which were 100, they have become 50. And you don't know where they passed. That's a loss already. That's the reality out there. So prepare your family for what? For retirement. Let's move to the next one. Next thing is a will. Go to the next slide. The next slide is a will. Now I'll talk to my brothers, the men. This is a very difficult document for us men. And sometimes our wills share information our family did not know. So for example, you might have started a small family in Soroti. It is there, it's a private family, but when you die, it becomes a visible family, isn't it? You need to make sure that you have left us with a clear document which shows all your families, isn't it? Say, I have an official family, it lives in Nalia, that's the official family. There is one in Mbarara, it has 2 children, and those children outside, they always look like you. The head is the same. You look at the fellow, even your family attempt say it's not your child, like a fellow, you look at the head, it is yours. So this is our father's head, isn't it? So you need to make sure that you have documented that what? But ladies, it doesn't exclude you. Because ladies have also become a bit interesting nowadays. But the point is that make sure there is a clear what? Document. At least take the pain away. Announce to your family that the truth is, I have 3 children. One is 14, one is 16. I built their mother a house in Tororo, and I leave that house to that mother. Because that mother who is not official, the land title is in your names. And that land title which is in your names, the mother who has the youngest children is living in that house. And the older mother is going to come and throw her out of that house because she's the one who has the letter of administration. Are we on the same page? And you cause pain to that family. At least if you have had chaos in your life, don't have chaos in your death. So make sure that there is a clear what? Document. Let's move and then we wrap up. These are options. I've talked about them. I think they were shared. But I want to share with you specifically all the things which were listed here. You need to understand that our default, we are farmers at heart. Generally, as Ugandans, we are farmers. That's where we are evolving from. So there are things we don't understand. When you talk about an annuity, we just hear, but deep down, we are going to buy land. That's what we are going to do. That's what we are going to do. When you tell us to what? To invest, we are going to buy land. So you tell someone that, you put your 200 million in an, let me go and buy a chibanja. Because it's what we understand. Now, some of these things, and the team from Icea, you need to educate us again and again. Because even if we appear like we are listening, the farmer in us comes out. When we get the money, the farmer what? Emerges. You say that, let me buy my land, and it is what? It is safe. At least these annuity things. The truth is that sometimes they're easier to liquidate. But some people have had land titles, and they are looking. Did you see the Mutaka who was with the old man who was very happy with very unhappy with the daughter-in-law for not releasing money? I don't know whether you saw the video going around. Some of you must have seen it. So this is an old man who has been in business a long time, and he came to the shop of the what? Of the daughter of the son, but the daughter-in-law was there. The daughter-in-law told him to go away. And the man quarreled. That was the video. We didn't even hear the daughter-in-law, but we saw the man. But the truth is that this is a cash flow problem. This is a rich man. He has lands, but he has no cash, isn't it? And he has come to this shop to get 5 million shillings. And the daughter may also be struggling because she has just paid URA. She has no money. Are we on the same page? And she doesn't understand how she pays 5 million to the what? To the father-in-law, and then doesn't pay her employees. That might be her battle. Are we on the same page? But it's a cash flow problem. So we need to educate ourselves about these options. Because the truth is, we don't come from that background. We are, at heart, we are farmers. If you ask an average Ugandan, what does investment mean? They see land. They see a house. They see apartments. That's what they see. When we are when we stretch ourselves a lot, we see a commercial, an arcade. Even though the top 3 floors don't work, but at least we see an arcade. The point is that that's what we see. We need to be educated. And that's the battle which we have here. So let me go to my final slide. Next slide. So I'm going to finish off with who is moving. I'm going to finish off with a get out of debt. I've talked about this. You can go to the next slide. I like this question. It's how I usually wrap up. Some of you have heard it, but you will have to hear it again. How many of us here you can walk to Ginger today? Now. Okay, I don't see any hands. Now, I want to change the question. Go to the next slide. Assuming we are seated here, Protea is right next to us. We hear, woo! Boom. Protea explodes. We think it's a joke. Woo! Boom. Kanakazana. Boom. It's gone. I certainly believe none of us would stay in this building. We ran out of this building. As soon as we ran out of the building, the security tells us that, you know what? Those things, by the way, which the rebels of ADF, they have taken over the roundabout at Boise. You know that one, they have just, the one which they are repairing, they have taken over. They have put a big gun there. Every building which is beyond 3 stories, they are bombing. However, the UPDF, the army which protects this nation, has protected that beautiful bridge in Jinja. You know it, that beautiful bridge which we have put up. And if you cross over to Jinja, Iganga, Soroti, Tororo, you are safe. But if you stay this side, you are on your own. At that point, how many of us can walk to Jinja? Be honest. When the bomb goes off. Now the question to the hands which have come up, where did the energy come from? Because I asked the same question before. When the question was asked to us, most of us said, me, in my younger years, I would do it. But now I can't do it. Friends, we will be with you in Lugazi. Even with a cannula. Say, but you man, you are even sick. Why? You are even closer to death than the rest of us. Why don't you just accept? Say, just malaria. Malaria we have dealt with for a long time. All of us would walk to what? To Jinja when the bomb goes off. And friends, that is the crisis of personal finance. That people only respond to bombs. They don't respond to saying, I have chosen on my own terms to walk to Jinja. Walking to Jinja is difficult whichever way. But at least make sure you are prepared. You have put on canvas shoes. You have nice gear to walk in. Some of us have kakondo. That means you have to walk on foot. Because you walk up to there and say, this thing is not working. So, but when we were young, we used to walk in feet. Say, you are here. The point is that when the bomb goes off, everyone can walk to what? To Jinja. So my submission to you is very simple. That the question we need to ask is, are we going to walk to Jinja on our own terms? Or are we going to wait for the bomb? We had a bomb recently. It gave us a good 1 year experiment. This COVID thing. During COVID, men were in kitchens. Man would pick up an onion from the dustbin. Says, who cut this onion? Who? How do you cut an onion and leave most of it inside? You are wasting onions. Take it back. There is another meal in there. Pull out that meal so that we can what? Men were in kitchens. They were monitoring, say, take off that light. Take it off. Take it off. When the bomb went off, we changed, isn't it? We changed. Because, ladies, and I'll tell you, for us men, we don't take shock very well. So, ladies were asking simple questions to their husbands. What are we doing for supper? Say, but who am I? Who am I? Why are you asking me about supper? But the point is that the bomb had what? Had gone off. Now, you can all walk to Jinja. You can all walk to Jinja. And personal finance is like walking to Jinja. It's a difficult journey. It's not exciting. It's actually a bit boring and hard. But walk to Jinja on your own terms. Thank you so much for your time.
Wow. Wow. Thank you so much, Mr. Mukasa. So, dear members, thank you for sticking with us, even through these presentations. I will allow, through the chair, 1 or 2 minutes if we have questions for Mr. Mukasa, for the benefit of the others and for the benefit of those who are online. If we have any questions for Mr. Mukasa, any clarifications, the chair will allow for 1 or 2 minutes for those. Chair, I think the bomb has dropped. So, Mr. Mukasa, thank you very much once again. I think the message is very clear. We do not have any other questions. I will hand over back to you, Chair.
Mr. Mukasa, thank you very much. That was very, very interesting. Mr. Mukasa is a financial literacy coach and business development professional. He has been training corporates, SMEs for over 10 years. And he's currently Director of Research, Innovation and Learning at Enterprise Uganda. We know Enterprise Uganda very well. But thank you for those hard-hitting words. Hard-hitting financial literacy session. It made us uncomfortable, and I think probably that's what you meant it to be. So we'll get out of here with those 3 big questions. Thank you very much. So we will move on to our agenda, which is coming to a close. Moving on to AOB. AOB, there should have been a notice a lot earlier for any AOB. Did we get any notice for AOB?
Chair, I can confirm we did not receive any AOB.
Oh, great. Without that, no notice for AOB. We've come to the close of our AGM. Thank you all for attending this AGM in large numbers. An AGM gives us an opportunity to hear from the management team. An AGM is also an opportunity for us to learn. I mean, we've just heard from Ronald Mukasa. Whatever we are going away with is huge, what we have learned from him. Please, as we move on, as we get out of here, share your thoughts about the meeting. Pass on your thoughts to the administrator. There's always room for improvement. I'd like to thank you all for participating in the AGM. Thank you for your questions. Thank you for your participation. And we hope we can see you next year in the next AGM in more numbers than this. Thank you all, and have a good afternoon.
Thank you to our chairperson. Just simple announcements. One, for those of us who did not have breakfast, we still have some breakfast available. Secondly, we'll have a group photo for memory's sake. So of course, we'll have the chairperson and the sponsor at the front, and then the photographer will be able to arrange us so that we can have a group photo. Thank you very much.
Nine, 8, 7, 6, 5, 4, 3, 2, 1. Nine, 8, 7, 6, 5, 4, 3, 2, 1.
Michael Nganda Kawanda, my name. I'm a former employee of Makerere University, Department of Mathematics, and I was teaching the subject to first, second, and third year students. Now I'm retired. I retired in 2019. It was through MABS, the body that manages the retirement benefits for Makerere University employees. So they're the first ones that invited us to the workshops being conducted by Icea Lion as a possibility for employees to invest their money and to ensure a lifestyle that is comfortable after retirement. There was a classic experience one of the professors who took all his money from MABS, and within 3 months the money was gone. And he wondered whether MABS had given all his money to him. So he went through the accounts, and then he discovered he had taken all that was due to him. After listening to all these experiences, I made my mind that I don't want to gamble with my funds. I don't want to learn with my benefits. I want 100% benefit from my money. The annuity, you can look at it that you entrust an insurance company with your benefits. They manage it for you as a business, and then you receive a monthly package. So I signed for a 20-year guarantee with an escalation of 3%. The good thing about it is that even if I leave, my wife or any other next of kin will continue to benefit as long as the guarantee period stands. They gave us a free medical benefit of 2 years. Get free medical care, get checkups, annual checkups. Sometimes we worry when we die what will happen. So also that, we've made arrangement with the company to take care of it for both me and my wife. So there is that peace of mind. As a regular salary earner, I looked at utilities like water, electricity, gas, charcoal, TV, and other things. So I don't have headaches to look for money to go to get this or that. The best advice is, especially to people in the academic sector and also other working sectors. I mean, many times we think we know that we can manage the money after retirement. But from my experience, the reality is what it is not what we think about it.